There we go. Okay. So now, first of all, like, what are your questions? So let's go through them, or should I go through them along the way? How should we do this?
Uh,
Yeah, tell me what your questions are, and then I'll answer them along the way. Okay. So that would be better.
main basically, if a
Direction.
range is confirmed, then I will doubt where we can sell, where we can buy.
Yeah, I'll show you. Okay. And
Let's start. I will ask.
okay. Yeah, let's do it.
Okay.
Okay. So first thing, now you know what strong highs and lows are, right? So something like this. This right here is what we call a strong high. Okay, this is what we call a strong high. So
Liquidity grab, breakup
yeah,
structure.
yeah. So stop loss has to be, yeah, liquidity has to be taken out, and then structure has to be broken like this. Okay, so once that happens, this right here will be what? A strong high. Okay, this will be a strong high, and same thing, this will be a strong low. Now remember, this formation is very important. Okay, this will be very important. Like some people call this the QM and all that stuff, right? A bullish and a bearish QM. So yeah, whatever
I
name you
heard
want to
that
call it, but
some.
like as long as you understand the logic behind it, it's more than enough. Okay, so something like this is a strong high, and this right here will be a strong low. Okay, this will be a strong low. And also now, when I say liquidity has to be taken out, like it doesn't have to be equal highs all the time. Okay, or else it doesn't have to be trend lines all the time. Now, yeah, this could be taken as liquidity, but it doesn't have to be this, because now you know the three candle formation, right? For a swing high and a swing low. I think I would have gone through that. Yeah.
Yeah, yeah, yeah,
Yeah, you know that, right? So
yeah.
if it just runs above one single swing high and gives you a break of a swing low, that's more than enough. Okay, that's more than enough. And remember, for the breaks, we will not be considering the wicks. Okay, so it has to always be with a body closing. Okay, you get that right. Now those days I used to use the wick breaks too, but we're not going to do that anymore. Okay, we'll be using body breaks only, because they are way more accurate than the wicks. Okay, so yeah, something like this. And then, and yeah, you know how these inducements and stuff works, right? Like, let's say we had something like this. Yeah, let's go through this quickly, and then let's get into the other topics. Okay, so let's say we had something like this, and yeah, maybe the market gave you a little retracement and another break. Okay, so now if you look at basic market structure, what can we see? We have a lower high, right? A lower low, another lower high in here, and then another lower low, right?
Low,
So
low,
yeah, this is just basic market structure. So you know what everyone does, right? Now, if they want to re-enter, they will also expect another lower high and lower low, right? Because
lower
it
high.
makes sense, because this is what makes sense to do, right? So yeah, everyone will be doing this. Everyone will be doing this. But so now, first thing, what will smart money traders do? Like they'll start looking at order blocks and now all the stuff in here, right? They start looking at order blocks or
Yeah,
something in here, like sell it here, stop loss above this and stuff, and then target lower prices. This is what the majority of them would do, right? And not only smart money, even supply and demand, right? Even supply and demand, and not only them, you know now what else? Trend lines, right? Trend line traders are also expecting the same thing. Maybe a move like this and then a drop, right? They're also expecting the same thing. And yeah, not only them, break and retest, support and resistance. And since this high right here is a swing high, what do we have above that high? Buy stops, right? Buy stops are resting above every single swing high in the market. Okay, so now, yeah, if you know ICT, yeah, you probably know him. So ICT tells you
yeah.
that liquidity is what? It's something like a magnet. Okay, liquidity is something like a magnet, and price is like a paperclip. What happens? It always draws towards the magnet, right? This is what happens. So you have to
Yeah.
always know where the draw on liquidity is, always where is the liquidity resting. So what do we mean by liquidity? Liquidity means the stop losses and the pending orders that are resting in the market. Okay, so now in this price action, in this bit of price action, where is the most amount of stop losses resting? It is right above that high, right? We know that. Okay, most amount of
Lower.
liquidity, yeah, it's resting right above that high. So is it safe for us to sell here with our stop loss above that high? No, right? It's not safe. So what we do is
No.
we look for a point of interest above it. Okay, above it. So this is what we do. Now remember, now when it comes to POIs, okay, now there'll be so like we have refined the way we used to look mark the
I have
POIs.
a
Okay, so
problem with the POI
yeah, I'll show
selection.
you. Okay, I'll show you, because like the way we mark out the POIs right now are completely different from how the smart money traders mark it out. Okay, so I'll show you. So
I trade in Euro USD. I have a screenshot of this. I just
okay.
practice the trade. Uh, Around I
Yeah,
watch
let's
in
let's go
league
through it. Let's
videos.
go through it. Okay, so yeah, let's go through it. Okay, so now, like right now,
Uh,
just forget whatever you learned from the previous ones. Okay, because right now we'll be doing something that's way more different. No, not very different though, because I'm not telling you to jump from one strategy to strategy. No, this is a refined version of it. Okay, some advanced version of what I
Okay.
already used to do. Okay, so using ranges and all that stuff. But the way we mark out POIs will be completely different. Okay, so that will be different. So now one thing, now we'll only be marking out just two types of POIs. Okay, one will be imbalances. Okay, so you know what imbalances are, but remember, imbalances are not
Yeah,
that
yeah.
important. Okay, imbalances are not that important. The most important type of POI will be the closing prices of candles. Okay, it will be the closing prices of candles. I will show you examples. So now, like, which means now, first thing, like, how are order blocks formed? So let's go through it. Okay, let's go through it. So now let's say maybe we had equal highs. Okay, let's say we had equal highs like this. Now, what will the retail traders assume? Most of the retail traders would assume that a double top is a sign of a reversal, right? A double top is a sign of a
Yeah.
reversal. So what will they do? Once this breaks, they'll expect a move like this, right? They'll expect a move like this. So what will
Yeah.
they do? They'll sell it with their stop loss above those equal highs, right? This is what most of them would do. Now, not only them, some people would call this the M formation. Some people would call this a strong resistance and all that stuff. So whenever price goes here, they'll be expecting it to drop, right? They'll expect the price to drop. But now there's smart money, right? Smart money knows that there's a pool of liquidity resting above that high. Okay, they know that there's a pool of liquidity resting above that high. So what they do is now, whatever retail traders do, smart money traders will do the opposite. Okay, so when retail traders are selling here, smart money traders will start buying it. Okay, they'll start buying it. Like, why are they actually buying it? That's only to take out the stop losses that were resting above that high. Okay, so after taking out the stop losses, what will they do? They'll start selling it once again. Okay, they'll start selling it once again. So now what's happening though? Okay, what's happening? So now smart money, they bought it in here, right? They bought it in here to push price back up, right? So this move right here is what? This is a forced move, right? This right here was not a right move. This was a forced move made by whoever that runs these markets. So now what's happening is when the market is moving down, the buy orders that they placed in these areas are in a drawdown, right? The buy orders that smart money placed in these areas are now in a drawdown. Okay, so now they don't
Yeah.
have to use stop losses because their pockets are deep. Okay, they do not use stop losses like us because they can always move the market. Okay, they can move the market. So what they do is they will push price back up into those areas where they earlier bought it from. So this right here is what we call a mitigation. Okay, mitigate out of their losses and then once again push the market back down. Okay, so what's the order block in here?
Recently,
What's that?
can I speak? Recently, it's in Euro USD.
Yeah. I'll show you examples. Okay, so people will be expecting like this is what we can expect because this right here is what we call a mitigation. So what is the order block in here? Now remember, an order block is not a candle. Okay, an order block is not a zone. An order block is a specific price level. Okay, so what is that price level? Now, remember that very well. Okay, an order block is not a candle. Okay, it is not a candle. It is not a zone. It is a specific price level. So what's the price level? Like it will be the opening price. Okay, the opening price of the bullish candle that did the manipulation. Okay, so you can take it that way, or else I will show you examples that way you'll understand it. So the opening price or as the closing price, I'll tell you why you should focus on the closing price. Okay, so simply an order block is a specific price level. Okay, can you understand that the price level that they use to push the market up like this? Okay, so that will be your order block. So remember, an order block is just a price level. Okay, it is not a candle. It's wrong. Okay, it is not a wick. It is not a. It's nothing. It's just a price level. Okay, so something like that. Can you understand that? Hope that's clear. Okay, so yeah, and the next thing
Yeah.
is now what's the breaker block? Okay, what's the breaker block? Remember, like a higher time frame order block is always a lower time frame breaker block. Okay, so
Breaker block.
yeah, a lower time frame breaker block. So what's the breaker block? The breaker block will be the last down candle before the manipulation. Okay, the last down candle before the manipulation is what
Before
we
the
call the breaker block. So rather than having the whole area marked out like this, you can always refine it to the breaker that might be in here. Okay, so something like this. So this is what we call a breaker block. But remember, now after today's session, you will not call it order blocks or breaker blocks or rejection blocks anymore. Okay, we'll just call it closing prices. Okay, so because like I'll tell you now, what we do right now is not purely smart money. Okay, because we have added Malaysian support and resistance into it. Okay, so the way we mark out the POIs are completely different from how smart money traders mark it out. Okay, so because we have marked out, like we have added support and resistance into it, so this is way more stronger liquidity and support and resistance. Okay, so this will be strong. I'll show you. Okay, so something like this. So these areas are the areas of interest for us. Okay, so something like this, the order block, this is the breaker block, and I'll show you rejection blocks once we get into the charts. Okay, so same thing in here. Same thing in here. Now, what will the retail traders do? They might think that a double bottom is a sign of a reversal, right? A sign of a bullish
yeah.
reversal. So what they would do is, once this breaks, they'll expect a move like this. right? So they'll buy it here, stop loss below the equal lows because they think that it is a strong low. Okay, so now not only those type of traders, some people will call this the W formation, right? The W formation, or is maybe a support and all that stuff. So they try to buy it here, but then smart money knows that there is a pool of liquidity resting below those lows. So smart money will push it down like this. They'll push it down. They'll take out everyone that wanted to buy here and then push it back up like this. Okay, so this is what they would do. This is what they would do. So now, what is the order block in here? Okay, what is the order block in here? The price level that they use to push the market down. So your order block could be from here, because why? There's this is where the last sell started, right? Or it could even be in here. Okay, it could even be in here, because now this issue comes, right? You have no idea which one to use. There'll be too many POIs. Okay, so I'll show you how to refine them. Okay, I'll show you how to refine them. So once again, now this right here could be called an order block. So the price level, okay, it's a price level. What's the breaker block? The breaker block will be the last bullish candle before the down move. Okay, so a breaker block could be here. A breaker block could even be here. Okay, a breaker block could even be here. Okay, so I'll tell you which one to use, because once we switch time frames, you will understand which one to use. Okay, so I will show you examples. So you get this right about order blocks and breaker blocks.
Yeah,
Now
yeah,
next thing,
yeah,
let's talk about these rejection blocks, because they are very important. Okay, they are very important. So let's see some examples, and then yeah, let's see, where do we have clear ones that I could explain? Yeah, something like this. Something like this is what we call a rejection block. So yeah, if you watch the previous videos, you know how we use the base of the wick as a point of interest, right? The base of the
yeah,
wick
yeah.
as a point of interest.
Opening
But
of the
remember,
wick and
yes,
50%.
exactly. Okay, the 50%, forget that. Okay, we're not going to use the 50% anymore. Okay, so
Cool.
we're not going to use the 50% anymore. Completely take it out of your trading model. Okay, so we're not going to use the 50% anymore. We will only be using the opening price of the bearish candle, or else, okay, like necessarily it's not the opening price of the bearish candle. Okay, it is not the opening price of the bearish candle, but the closing price of the previous candle. Okay, the closing price of the previous candle. Like, it's very simple, because the opening price of this candle is obviously the closing price of the previous candle, right? But the
Yeah,
thing is, like, once you switch brokers, you will see some issues, right? You'll see gaps, because the opening price, the closing price of the previous candle is here, but the opening price of the next candle is somewhere around here. You'll have a gap. Okay, so then you'll have no idea which one to use. So remember, always focus on the closing prices of candles. So because according to support and resistance, a resistance is something like this. Okay, a resistance is something like this. We call it the A formation. Okay, or as some people call this a last resort or whatever. Don't confuse the names, okay, because the names are not necessary. As long as you understand the logic behind it, it's more than enough. Okay, the names aren't
yeah.
necessary. So the formation like this is what we call a resistance. So like this. Okay, so now look at this. This area right here, if you look at it on a line chart, what is it? See that? This formation. Okay, so can you see this formation right here? This one. Okay, so this right
Yeah,
here
yeah.
is what we call a resistance. Okay, that is what we call a resistance. And same thing, this right here is what we call a support. Okay, the
A
V
support.
formation, the A formation and the V formation, something like this. Now, obviously, this did not hold. I'll tell you why, because when the market is bearish, the supports are not going to hold anyway. Okay, so see, this formation is what we need to see, a support like this. See that? This right here. Okay, so A's and V's. Okay, remember, we'll be using the line chart a lot too. I'll explain more. Okay, so something like this. Now, what happens when this breaks? Now, first it was a resistance, but once it breaks, what happens? It acts as a support. Okay, simple. Okay, first it'll act as a resistance, but if it breaks, it will act as a support. So we can
Support.
expect a move like this. Okay, so it always moves from support to resistance, support to resistance. I'll show you examples, don't worry. Okay, so simply a formation like this, we can call it a resistance, a support, or else a rejection block, whatever you prefer. But as long as you understand the logic behind it, that's enough. Okay, so it doesn't matter what name you call it. Okay, so something like this. Something like this is what we call a resistance. Okay, this is what we call a resistance. So now I'll show you another example. Let me put the replay tool somewhere here. Okay. Now, if I ask someone, what is the order block in here? Okay, what is the order block in here? Not the whole thing. If you mark it out like that, that's wrong. Okay, because what is the order block in here? The order block in here will be the opening price of the bullish candle, the body of the candle, or else the closing price of the previous one. Okay, so this right here is what we call the order block. This right here is what we call the rejection block, or else according to support and resistance terms, what do we call this? We call this a resistance, and we call this open close levels. Okay, we call this open close levels. Once again, Names are not necessary. Okay, as long as you understand the logic behind it, it's more than, because people call it different names. Okay, so if you understand the logic behind it, it's enough. Okay, so now look at this. Look at this price level. If I go to a lower time frame, do you think anyone will have an idea what this price level is? No idea, right? What is there?
No.
Nothing. Okay, nothing. But what happens? Look at this. Look at the reaction from that level. Look at the reaction from that level. Because why? Okay, because this right here was the 4-hour order block's price level. That's why I told you an order block is not a candle, it is not a zone, it is a specific price level. Because can you see? First of all, it acted as a support. Can you see it? Tapped, it started going
Yeah.
up. But now it is broken, then what happens? It will act as a resistance. See that? Okay, so
Yeah.
simple stuff, but you must understand the logic behind it. Okay, so simply we will be focusing on closing prices of candles. Okay, I'll tell you why. And also, now there is a simple rule to this. Now, let's say the market has tapped this already, like this. Let's say the market has already tapped into this resistance like this. Okay, so we will not use this level anymore. Can you understand that? We can't use this level anymore because we will only be using fresh levels, levels like this. Okay, so if it is tapped in, like if it is tested like this, we will not call it a fresh level. Okay, it is not a fresh level, so we
Oh,
can't use this level anymore. There are times when price once again comes back up and then falls, but most of the time it will not. It will break through it again. So you can only use it once. Can you understand that? Okay, I hope it's clear. And then again, now I'll tell you why I told you to use the closing prices of candles. Okay, so I think there was an example on FXCM. Let's see. Yeah. I don't remember if it was GBP USD or Euro USD. Let me see. Oh, yeah, it was GU. Let me show you. Somewhere around here. Okay. So now if I ask someone, what is the order block? What will they tell you? Either they'll mark it out like this
candle.
or it's like this. This is
Yeah.
what they would do, right? But I told you, what is the order block? Is it the opening price of this candle? No, it is the closing price of the previous candle. This one right here. Can you understand that? Okay. Not the opening price
Can
of
you
this
explain
candle.
it?
Okay. So now it's like this. I told you always use the closing prices of candles, right? The closing prices of the candles. So now, but the thing is now, the way the common traders mark out an order block is like this, right? Maybe like this, or it's from the opening price of this candle, the body of this candle right here.
Uh,
That is
can
what
you
they call an
explain
order
it
block, right? Okay.
once
So
more?
yeah, now simply what you should use is not the opening price of candles. Remember, it is not the opening prices that we're dealing with. Okay, we're not focusing on the opening prices, we're focusing on the closing prices. Can you understand that? The closing prices. So, like, you know how a candle is formed, right? A bullish candle, like it opens here, goes down, goes up, closes here. A bearish candle opens here, goes up, goes down, closes somewhere around here. Okay, so simple stuff. So now in here, are you going to use the opening price of this candle? No, opening prices has no significance at all. Remember that very well. Okay, the closing prices, that is what you should deal with. Because now if I just put a line chart in here on the opening price of, I'm sorry, if I put a line in here on the opening price of this candle, if you go to a line chart, where is it? Out of nowhere, right? In the middle of nowhere. But if you put it to the closing price of this candle and then check the line chart, where is it? On the resistance. See that? Okay, so always
Yeah.
remember to focus on closing prices of candles. So now when I say an order block is not the opening price of this candle, but the closing price of the candle that
Closing
is
price.
before it, that is in here, this one. Can you understand? Because this closed here, this opened here, so we do not know why they gave you a gap, because that gap is present on some brokers. We don't know why, but always make sure you use the closing prices of candles. Can you understand that? Because now, look at this now. Most people will tell you, oh, this is the order block, the body of the candle. Let's wait until price gets here. But if you go to a lower time frame, look at where price is going to react from. Okay, there it goes. Where did it react from? From here or is here? Now, do you think anyone will have an idea where it tapped into? No idea, right? No idea. So that's why
No
I told
idea.
you, use the closing prices of candles. Okay, I always make sure you use the closing prices of candles. I'll show you more examples. That way you will understand, because like the way we mark out POIs here will be a bit different. So until you understand it, let's go through some examples. Let's see. Where were we? The example we were talking about. Yeah, in here. Let's see. Yeah, look at this one. Look at this one right here. Okay, now in here, if I ask someone what is the order block, they might mark out this thing, right? Right? That's the order block, right? For them, because the last push up before
Clear
the push
add-on.
down. Then they'll tell you it is mitigated. Why? Price has tapped into it already. But what is the order block in here? I told you what the order block is, right? Is it the opening price of this candle? But
Closing
no,
it.
the closing price in here. See that? Now has it been mitigated? Has that price level been tapped into yet? No.
Uh,
Yeah.
Color of candle does not matter. Uh,
Colors doesn't matter. Okay, so you can even have
okay.
both the colors black. Okay, like because all you need to do is
Oh,
just use a line chart, and then wherever in the line chart you have these little spikes, you can use them as POI. See this? Now, if I put a line chart in here, can you see a little spike in here? See that? There's a little spike in
yeah,
here
yeah,
because why? The line chart only prints the closing prices. Okay, so this right here will be that price level. Now, I told you a higher time frame order block is a lower time frame breaker block. Right now, if I go to the H1, what do we have? I told you the
breaker.
last bearish candle before the up move is what we call the breaker block, right? Or else just use a line chart, you will see that this is where the last push up began before the push down. Can you see that? See
Yeah,
very clearly, this is where the
mm,
last push up began. And also now, if you understand about this opening and closing prices, you can do some good refinements. Okay, because look at this. This price level, not huge refinements. Okay, you're not gonna take this and then take it here. Okay, so that's too much. That's too much. Okay, you're not gonna do refinements like that. You can do a slight refinement. Maybe take this level into here. What is this? The rejection block or is the open close levels. Can you see that? The closing price of the
yeah,
bearish candle. Because this right here is still unmitigated. It's fresh. Can you see that? Okay, so something like this. So what
yeah,
happens? Where does the market come into? Right there. And it drops. See that? So it's very important. Now remember, like you're not gonna use every single A and every single V as a point of interest. Okay, remember that very well. Okay, you're not gonna just for the sake of it, you're not gonna use all of it like this. Main thing, what is it? It has to have liquidity below it. Then you can expect this. Can you understand that? Then you can expect this. Okay, so same thing in here. You're not just gonna randomly use a support just because it is a support. Okay, because now in here, for example, do you think this one will hold? No, because one thing, the market is still bearish. Okay, the market is still bearish. Let's talk about ranges and all that stuff later. But what happens? Through it, straight through it. Because why? When a market is bearish, we're not going to mark out supports. Okay, we're going to mark out resistances only because can you see what's happening in here? All of the resistance are still unbroken. See
yeah.
this tapped here.
Safe.
See this tapped here. Okay, how many entries do you have? This tapped here. Because why? The market is bearish. See that? So entries will be very easy once you understand the direction. So let's go through direction later. Let's go through direction later. I'll only show you POIs right now. Okay, so same thing in here. For this to be a valid or as a proper POI, it has to have liquidity above it. Then you can expect this. Can you understand that? Okay, it has to have liquidity above it.
Yeah,
I'll show you more examples. Okay, I'll show you more examples. So you saw the reaction from here, right? Taps and then it starts to melt. Okay, because it is a 4 hour level too. So let's see some more. Let's see some more examples. Where do we have? Yeah, in all these areas, we do have these rejection blocks and all that stuff because, like, even Friday's news, where did EU tap into? Where did EU tap into? Let me show you. Okay, look at this. We had a swing low in here. Okay, we had a swing low in here. That could be liquidity. And right below that, what did we have on the 4 hour time frame? Right below it, we had a rejection block. Can you see that? Open close levels. You can see that, right? Never tapped into it. Okay, so where did news tap into? Where do you think news tapped into? Look at this. There it goes, flies. See that? Because I told you those levels are very strong. Okay, those levels are very, very strong. So I'll show you more examples. Let's see. Go to GU. Like remember, like we're not gonna just focus on every single pair. Okay, it'll be EU, GU, and gold. Okay, EU, GU, and gold. Those are the pairs that I trade. Okay, so I'll show you. Now look at this one. We have a nice example in here. Okay, look at this. If you go to lower time frame. Now I'll ask you a question like, what's the most recent major breakout structure we have here? What's the most recent major breakout structure we have here? This one, right? Right here,
yeah,
from here. So what is it? It's a bearish break, right? It's a bearish break. Very
yeah,
clearly, it is a bearish break. The market is still bearish. So remember, when the market is bearish, every time it goes up, why is it going up? It's only a pullback, only a retracement. Okay, it is only a retracement. How do we know the retracement is over? Once again, the counter trend has to do the same thing as the major trend. So how do we know what the major trend is doing? The major breakout structure. Okay, the major breakout structure shows us what the major trend is doing. So now what happens? When the counter trend is also doing the same thing as the major trend, we know that the pullback is over because now look what happened here. Higher highs, higher lows. Now I'm drawing the counter trend. Higher highs, break. Can you see it? There we get the break. So what
yeah,
is this? This is the formation of a strong high, right? That's the formation of a
Yeah.
strong high. Okay, because
Strong
why?
eye.
Yeah, structure was broken here. Not with these wicks, not with these wicks, but once we got a
This
body
time.
closing here. Okay, so only with this closing, we consider this to be a breakout structure. Then this turns into a strong high because liquidity was also taken out before the breakout structure. So now remember, this is what we do all the time. When a lower time frame strong high is created, okay, we always go into the higher time frames to check what our point of interest is. Okay, so now on the 1 hour time frame, this right here is what? This is a strong high, right? That's a strong high. Okay, so
Yeah.
then what can we
Yeah.
do? We can go into the higher time frames to check our point of interest. If I go to the 4 hour time frame, look, if I go to the 4 hour time frame, what do we have? What's the point of interest? Rejection block or else the resistance. I told you, right? This is the formation for
Yeah.
a resistance. Okay, and I told you this would be a valid or else this would be a high probability zone if it has what? Liquidity below it.
Liquidity.
Okay, so strong high liquidity. You will see how consistent this setup is. Okay, you'll see this happen all the time. Liquidity. Now, first thing, strong high liquidity below it, higher time frame point of interest. Since the market is still bearish in here, we can sell it like this. Look at this now. We're still on the 4 hour time frame. Okay, we're still on the 4 hour time frame. Where will we place our stop loss? Above the strong high. So 2.5 pips. Okay, so still on the 4 hour time frame. Okay, still I'll show you more examples. Okay, not just a one time thing, it happens all the time. Okay, so there we go. There we have a 2.5 pip stop loss, but obviously you can't do this with spreads, so you'll have to at least have maybe something like 3.5. Okay, you'll have to factor in the spreads anyway. Okay, so for targets, your first target can be that day's Asian low, or else maybe the external range liquidity that is in here. So stuff like that. Okay, I'm not talking about targets, we're only talking about POIs in here. Okay, we're only talking about the points of interest. So what happens? Look at this. Look at the precision. Right into it. See that? Right into it, and what happens? Melts. Okay, yeah. You can check my channel out for this entry, this same exact entry. So what happens? Taps, and then it melts. But do you think anyone will have an idea where the entry came from? No idea, right? Because there's nothing in here.
No idea.
Nothing in here. So I told you it is a resistance. Okay, we're focusing on this resistance, and it is a strong one because why? It has liquidity below it, and it was also on a strong high. Okay, so this right here will be a very consistent setup. Strong high, okay, liquidity below it, and the
Yeah.
rejection block or as the resistance. Okay, same thing like this. I'll show you many examples with this and this. Okay, liquidity, strong low, support. Okay, so you
We
can
can
see this.
do it
Yeah.
any time frame. We can do it any time
No,
frame.
no, no, no. Let's talk about time frames later. Okay, because you can
Okay.
do this on any time frame. Okay, but you're not just gonna use the 50 minute or the 30 minute all the time. Okay, or the 1 minute or the 5 minute. Okay, because you know how messy the lower time frames are, right? We can't read it
Yeah. Yeah.
properly actually. Like it's not that easy. It's
It
not that easy. It
confuses the
takes a
lower.
lot of practice.
It
Yeah.
confuses.
Okay. So it takes a lot of practice and back testing and understanding and all that stuff. But still, we can be wrong. Okay, but once you stay on the higher time frames, it will bring you more clarity. Okay, it will bring you more clarity, and you're not just gonna take a trade and then close it with like 10 to 15 pips. No, you're gonna hold it for a long time because why? You're trading on a higher time frame, so the pip count will be higher.
Yeah.
Okay, so I'll show you more examples of this support and resistance stuff. Okay, because it's different. Where else do we have clear example? Look at this one. Clean. If I put the replay tool here and go to a lower time frame, let's talk about time frames later. Okay, I'm only showing you examples of POI, so the like
Okay.
don't confuse anything. Okay, let's go through it one by one. Look at this. What's price doing? Creating higher highs, higher lows, higher highs, higher lows, higher highs. So obvious, right? What will everyone expect? Higher low, higher high, right? So
Yeah.
what will they do? They'll tell you, oh, there we go, a demand, right? Or
Yeah.
as an order block. Okay, so let's buy it here. So smart money is buying it here. Supply and demand is buying it here. Who else? Trend lines. Trend lines are buying it here. Everyone is buying it here, right? So is it safe for us to buy it here too with our stop loss below that low?
No.
No, not safe at all. So
No.
what we do is we identify the liquidity and then we look for a point of interest below it. Okay, so now if I go to the H4, what do we have right below it? A support or else a rejection block. Call it what like yeah, what do you want to call it? A support or else resistance or else a rejection block or order block. So the ITC terms. I prefer calling it supports and resistance. Okay, or else open close there. So that's better because it's not that confusing. Okay, so we have a support. We have a support in here. And also I told you about this, right? Just now I told you
Yeah.
about this setup right here. Use a line chart Isn't that the setup we have here? Isn't this a
Yeah.
strong low now? See that? Strong low, okay? Liquidity above it, and there we have the support. See that? There we have the support,
Yeah.
untested, unmitigated. And yeah, now if you want to, you can even do refinements of these POIs. Okay, so you can even maybe drop into lower time frames and then do some POI refinement. So let's see. I told you, right? A higher time frame order block is a lower time frame breaker block. That's the same way, a higher time frame rejection block can be a lower time frame order block. Okay, now on the 4 hour time frame, what is this? Just the support, right? A rejection block is the closing price. But if you go to the 1 hour time frame, yeah, once again, even on the 1 hour time frame, it is a support. But let's check the 30-minute. What is it? A clear full bodied order block. See that? Okay, that's why I told you, like, once
Yeah.
you switch time frames, you will get a different view of it, because you can call it a rejection block. I can call it an odd block. None of it is wrong. Okay, so the best thing to call it, just call it a support. Okay, so that's, and yeah, let's check how we can refine it maybe. Yeah, look at this one. On the 50-minute time frame, like, I'm not going to take this price level and then move it here. That's wrong. That's too much of a refinement. Okay, so that's not even refinement. You're completely changing the zone. Okay, so refinements has to be like around 2 to 5 pips from the zone. So maybe you can take this level and then move it to somewhere around here. Open close levels. Can you see that? Okay, so
Yeah.
somewhere around here.
Yeah.
Yeah, and then what you can do is maybe from when everyone else is buying it here with their stop loss here, we can buy it here. See that? We can buy it here now. We can buy it here with our stop loss below the what? The rejection block. See that? So you have around 5 pips. You have around 5 pips below that low. And then where do you target? You target the external range liquidity. Okay, you target the external range liquidity. Now, what is everyone else doing? Buying it here, right? Everyone is buying it here. Okay, so we know that
Yeah.
everyone is buying it here. So now look at the reactions though. There we go. Buy it, buy it, buy it. Everyone's buying it because look at the reaction, reacting from the zone. But when the time is right, smart money steps in and then bam, everyone is taken out. Then we enter the market. Okay, once everyone is taken out, that is where we enter the market like this, because there's no more liquidity to be taken out, right? They have already taken out that majorly, the trap or whatever you want to call it. They have taken out that low. Then what happens? Then it flies. See that? Okay, so what happened? What happened? You see that, right? You see it. It came
Yeah.
from the 4 hour support. Why? Because it was a strong one, since it was on a strong low and it had liquidity above it. You see that, right? So that was a nice example. So I'll show you. I'll show you some more. Let's see. Yeah, let's get back into those price levels itself. Where were we? Yeah. Now look at this one. Another one. Let's go to the lower time frame. Okay. Okay. Now if I go to the H1 time frame, let's go to the H4. Okay, there we go. Now can you see that? What is this? Liquidity. Equal highs, right?
Yeah.
Equal highs.
Yeah.
So are you gonna go to a lower time frame and then mark out an order block in here and then sell it? No. Okay. We'll
No.
have to look for a point of interest above the pool of liquidity. Okay. Above the pool of liquidity. So what do we have right above this? We have a rejection block on the H1. Open close levels. Okay. What if you do this? What if you do this? Sell it. Stop loss above that. What if you do this? Let's see. Stopped out. Why? Why did that happen? Okay, so remember, it doesn't matter how clear your lower time frame POIs are. Okay, you're not gonna use them unless you check with the higher time frames. Because remember, when you spot the liquidity, what you should do is you should go to the highest time frame to check
Higher
your
time
point
frame.
of interest. Okay, like most people will start marking out the POIs from the 1 minute time frame. Why? To get a tighter stop loss. Okay, so they'll have POIs in here, they'll have POIs here. Like when they get the right trade, they will not even have money in their account. Okay, because why? They're losing a thing. Okay, so don't do that. Always start marking out your POIs from the right side of the time frame. So check the monthly, maybe there's nothing on the monthly, check the weekly. There's nothing on the weekly, you can check the daily. Because when there is something on the daily in here, let's say in here, can you use something on the 1 hour in here? No, what's stronger? Obviously the daily, right? Obviously the
Daily.
daily. Okay, so now look at this. Above this, if you go to the 4 hour time frame, what do you have? Where's your point of interest? Here.
Just
Do you have anything in here? No, there's nothing in here.
no.
Okay, so what would you prefer? Like the 1 hour is the 4 hour? Obviously the 4 hour, right? So refine it to the
Yeah.
4 hour. Okay, refine it to the 4 hour. So what happens? What happens? Now it goes into that. See that? Now it goes into that. And also now, just always just check the line chart. Okay, because I did not take the sell. I'll show you the trade I took. Now, can you see that? This candle right here, with this top hunt, it has also closed above this swing high. Can you see that? It has closed above this
Yeah.
swing high. So which means This low now turns into a strong low. Liquidity taken, structure broken. Use a line chart, you'll see it very clearly. See that?
Yeah,
We
yeah,
have a strong low. So now, if it is a strong low, can I take a sell in here and then target a strong low? No, right? It might react to a strong low. Can you understand that? Like we
yeah,
can't, yeah, we can't directly target a strong low. So you should have safer targets. Where are your safer targets? You have equal lows. There we go. We have good targets. Okay, we have good targets. Now, once again, like I told you, I did not take the sell. I'll show you the trade I took. If you go to the 4-hour time frame, what do we have? Now, once again, we have this formation I told you about. Boom. You know what happens when we have this. See, stop fund, breakout structure,
yeah,
strong low, liquidity above it. What is this? A support, right? Or as a rejection block, whatever you want to call it, like this. Okay. Then what can you do?
yeah,
You can buy it. Okay, you can buy it here. Where will you place your stop loss? Below the strong low, 3.7 pips. See that? 3.7 pips. Like what more do we need, right? 3.7 pips. Like because even if you go to a lower time frame, this is like the tightest stop loss you're gonna have, right? Okay, we know that. So if you can get it from a higher time frame, what's the purpose of going into the lower time frames? Some people I see they're even using the second time frame. Okay, so don't do that.
yeah, yeah,
Okay, if you are doing that, delete them. Okay, because they are messy. We can't like trust me, we can't. Okay, we can't read them like that. It's hard. It's very hard. Okay, because just think of this. Just think of this bullish candle only. Okay, just think of how the inside of this bullish candle would look like on a 30-second time frame, or it's on a 1 minute time frame, right? We might have this and the breaks. You might want to sell it here, but price goes up because why? It is reaching this pool of liquidity. See that? So lower time frames are very messy. Okay, stay on the higher time frames if you want more clarity. Okay, so what happens? Look at the drop from that to this. Okay, now don't worry because this is a strong low. Test liquidity above it. Now look at the reaction. Goes back up. See that? It goes back up. But once again, can I target this strong high? No. Use a line chart, you'll see why.
no,
Because it is a strong high. Liquidity is taken out. These are broken.
breakup section.
Okay. Just go to a 1 hour time frame. You will see it very clearly. Can you see that? Very clearly,
Yeah,
liquidity is taken out in here and structure was maybe broken in here. So once again, what do we do when there is a strong low on a lower time frame? I told you we go to the higher time frames to check our point of interest, right? When there's a strong
yeah,
low on or a strong low or high on a lower time frame, we always go to the higher time frames to check our point of interest. So on this strong high that was created on the H1, what do we have on the H4? What is this? A resistance. Can you say same exact thing? A resistance.
yeah,
Okay, we have the rejection block, whatever you want to call it, but something is missing. What's that? No liquidity below it.
liquidity.
See that? No liquidity below. But yeah, it did play out from this zone. Okay, but I did not take the sell. I only took the buy in here. And also I closed it out at 50 pips. Okay, so just 50 pips. Okay, so because I did not hold it directly up to here. So what happens? Look at the reaction. Whoa. Look at that. Okay, and this right here, this could have even been a better entry because one of my students took this and sent it to me, I remember. I think, yeah, look at this. He refined this 4 hour zone into what? Into the 15-minute support that was over here.
Yeah,
See that? Okay, so
more
then,
refinement.
yeah, so the entry would be even better. See that? Even a better entry like this. What happens? There it goes. See that? There it goes. Okay, there it goes. And then look at the reaction from the top one too. Yeah, it did play out from the top one, even though there was no liquidity below it. Look at the reaction. Hmm. Can you see the precision? Still on the higher time frames. Okay, still on the higher time frames. So you don't have to go to the lower time frames. Okay, just completely forget the lower time frames if you want to increase your win rate. Okay, stick to the higher time frames because you don't want to like the thing is like I used to play on the lower time frames too. Okay, like when I did not have a proper understanding. But you see, like once you take so many losses on lower time frames, you become frustrated, right? You think like
Yeah,
this shit is not gonna work. Okay, you just completely try to give up. But stay on the higher time frames, you'll gain more confidence. You'll gain more confidence because your direction is right, your POIs are right, and all that stuff is right. Okay, so make sure you stay on the high time frames. And like the thing is, like, do you think anyone will have an idea where these entries are coming from? No idea, right? Look at the
no way.
and did I even go to a 1 minute or 5 minute time frame? No, but look at the precision. See that? Okay, you don't have to. Okay, you don't have to. So I'll show you more examples. That way you will understand it. Okay, so let's see about POIs. Yeah, let's get back there itself. Let's come from here to yeah, and also like I'm not gonna tell you it's gonna give you sniper entries every single time. Okay, like sometimes we will have this set up very clearly, but then the market does this. That happens. But as long as you know how to manage your risk, okay, you do not have to worry about the losses. Okay, so
Yeah.
that's the thing. You don't have to worry about the losses because see, like for example, yeah, here we go. A nice example. See, what is this? This is a strong high, right? Liquidity taken. Okay, structure broken. Perfect. Strong high. We have liquidity below it.
Yeah.
But did the resistance hold? No. Yeah, it did hold though because it never went above the strong high. See that? It never went above the strong high, but obviously, like you're not gonna take a sell here and then place your stop loss above that high, right? That'll be too many pips. Let's see. Yeah, 30 pips. Are you gonna have a 30 pip stop loss? No, no way. I will not. Okay, because I remember this because I got stopped out in here. Okay, like try to refine it to a lower time frame, sold it, and yeah, stopped out. Okay, because see this the 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 drawdown was too much. See, I used the 5 pip stop loss or something, and this happened. Okay, so don't worry, don't worry. Like I told you, as long as you know how to manage the risk, you don't have to worry about the losses. Okay, so I'll show you more examples. Yeah, look at this one. Where did this tap into? Took out this swing high, took out this swing high, tapped right into the open close level. Tapped and boom. Look at this one. This was FOMC. Okay, I'll show you a trade with FOMC. Hmm. Can you see that the market has broken above this swing high? Can you see that? A bullish break. You can
Yeah.
see a bullish breakup very clear. Not with this wicks, but once you got a body closing in here. So which means now this low turns into a strong low, right? Liquidity taken out and structure broken. So what did I tell
Yeah.
you? When a strong low is created on a lower time frame, where does your focus go into? To the higher time frames, right? I told you now. On the 4 hour
Yeah.
time frame, this is a strong low. But if you try to pick up your POI from the 4 hour itself, how many do you have? You have an order block. Okay. You have a rejection block or as a support. You have another support in here. Are you gonna buy from all three of them? You can't, right? You can,
Yeah.
but you'll get stopped out many times. Okay, but that's why we go into the higher time frames. Now, if I go to the daily, what do we have? A support in here. See that? For our strong low,
Yeah.
there goes our support in here. Now you can maybe go into lower time frames and then refine this level. You can play around this level. Okay, so if you go to the H1, let's check. Yeah, we have this liquidity taken out. Yeah, let me make the line straight like this. Yeah. Now look at this. You can maybe refine this one into the 1 hour support that is in here. Can you see it? I told you. Okay, now you
Yeah.
can slight refinements. Okay, you're not gonna take this and then take it somewhere around here. That's wrong. Okay, just slight refinements, 2 to 5 pip refinements. Maybe take this, take it here. See that? Taking it here. Okay, so now let's see what the market is gonna do. Now, if you understand about ranges, you will see that the current range you have is from here to here. Okay, from here to here. And then this right here is the internal range liquidity. This is your high time frame point of interest. Okay, now this day we have FOMC coming at 11:30 p.m. Okay, you know what FOMC is, right? So FOMC comes at
Yeah. Yeah.
11:30 p.m. Okay, so now look what they're doing. What are they doing? Look at this. Equal lows. Building up, building up. So right below that, what's our point of interest? A daily support. See that? They're feeding liquidity into that daily support. So are you going to make any unnecessary moves in here? No, you're not.
No.
Okay. Yeah, now not only liquidity in here. Look at this trend lines.
Yeah.
See that? Perfectly playing out from a trend line. So before news, this stuff happens. Okay, it goes from supports, it plays from resistances, it goes from trend lines and all that stuff. But patiently wait. Okay, patiently wait. What happens now in the next hour? News comes and then boom, there it goes. See that? Stopped out everyone. Where did it tap into? Now you see where it tapped into, right? Into the
Yeah.
is this a
Daily.
just random 1 hour like support or rejection block? No, it's a daily level. Okay, it's a daily level. So what happens? You enter at internal range liquidity, you exit at external range liquidity.
External rates.
Okay, so what happens? Oh, news. You're done. See that? So it's pretty strong stuff. Okay, it's pretty strong stuff. So all you have to do is just understand the logic behind it because I told you about this setup, right?
Yeah.
It's the same thing that happened here, but like not the same though, because if it looks exactly the same, then anyone will make money in this market, right? It's not that clear, but it's the same exact thing, right? See, we had a strong low. Okay, we had a strong low. We had liquidity above it, but not like this, but like this. Liquidity above it. We had a support that was on the daily. So what happens? It started flying. See that? So these levels are very important. Okay, so I'll show you more examples. Let's see. Mm. Where do we have proper zones? Let's see. Yeah, we go in here. Look at this. Yeah, where did this step into? Resistance. See that? Ah, yeah. Yesterday I was, not yesterday, I think it was 2 days ago. I was showing one of my students, like he asked me how I got this. I got an entry somewhere out here. Yeah, I'll show you. Look at this. Okay, now if I go to the H1, what do we have in here? A strong high, right? What is that?
Yeah.
Why is that? Because it has taken out liquidity and it has
Breakup
broken
structure.
structure. The thing is now, if you try to pick up a POI from this time frame itself, can you do that? No, right? Look how messy it is. So many weeks. So what do we do when a lower time frame strong high is created? We always jump into the higher time frames, right?
High
So
time
if you
frame.
go to the 4 hour time frame, what do we have? We have a resistance in here. Why are we marking this one out? Because these ones are already mitigated. This is the fresh one.
Mitigated.
Okay. But then again, if I go to the daily time frame, where's your daily point of interest? See that?
Just
Yeah. So which one are you going to use? 4 hours the daily? Obviously the daily, right?
daily.
Yeah. So why? Strong ones. Okay, you're going to use the strong ones. So now if I go back to the H1, now once again, we have that same exact setup I told you about. Can you see that? Okay.
Yeah.
Right here. Liquidity and the sell. So where's the liquidity? Here we have a swing
Just
high
below
very
it.
clearly. A swing high. Now this is not just random swing high. Okay, this is not just a random swing high. This is not just a swing high liquidity, because now you know how, like, what people teach, right? Oh, there we go. These full bodied order blocks are strong, right? This is something like a drop base and a drop. Okay, this is what, this is
Yeah,
the supply.
mark the zone and
Okay, so
lower
yeah.
time frame.
Now once price gets here, and with the slightest break you get on a 1 minute time frame, there comes everyone jumping into sell, 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 sell. But
Yeah.
you have to understand what, there is a daily zone in here. So why would it reverse from a 1 hour zone, right? What's stronger? 1 hour is the daily, obviously the daily. So
Daily.
these are going to get taken out. Okay, people are going to sell here. So that will create a pool of liquidity in here. See that? So what are we doing? When everyone else is selling it here, we sell it here. Stop loss can go above these wicks. See that? So you have around what? 5 pips. And then you can target the external range liquidity. Once again, let's talk about ranges later. Okay, I'm only showing you the POI. So we can sell here, enter at internal range, exit at external range, like this. Okay, so you get the setup, right? So now, do you think anyone will have an
Yeah.
idea what this is? No.
No.
No idea. Just a random line out of nowhere. But look at the reaction from that random line. Oh, there it goes. What is it now? Now you know that, right? This will be a daily point of interest. And then
Yeah.
comes the drop. See that? Did you see where it came from? From a higher time frame. Okay, like even like right now, let's go there. Like the current price action on GU. Do you have any idea where it reacted from? Any idea where
No.
this reacted from? No idea, right? No idea on this time frame. Go to the monthly. Where is it reacting from? There we go. A support.
Monthly support.
See that? So where is the move coming from? Can you see that now? So
Yeah.
very strong levels. Okay, so these are very strong levels. See, that is why news flew up, because it was on a support. When it is in a support, do you think news is gonna come down? No. Supports are meant to take price higher, right? Resistance are the ones that are meant
Yeah.
to take price lower. So when news comes, when price was on a monthly support, can you expect the market to drop? No, you can. The only thing you can expect is
No.
the market to fly. Okay, so stuff like that. So you understand that, right? So now you see where those entries came from. Okay, so I'll show you. I'll show you some. I'll tell you how to use the time frames systematically. Okay, because like right now with the examples I'm showing you, we're all over the place, right? For our daily, weekly, monthly, like you have no idea which one to use and when. Okay, but I'm only showing you POIs. Don't worry. I'll show you how to mark them out. Okay, I'll show you how to use the time frames properly. Okay, so yeah, let's see. Yeah, look at this one. I got stopped out in here because, see, if I sell it here, you know what I would do? I sell this with a standard 5 pip stop loss. But look at the drawdown, it was too much, 27 pips. Okay, so are you gonna anyway take a sell here and then have it above this high, a 30 pip stop loss? No. Okay, so you'll get stopped
No.
out there. Okay, I'm only showing you this resistance and stuff. Okay, so look at this. Where did this tap into? Resistance dropped. Okay, where did this one tap into? Resistance. Can you see that? Okay, so it keeps on
Yeah.
happening. It keeps on happening. Okay, because I can't make these things up, right? Even if you go to your chart, you'll see the same thing. Okay, so look at this. Where did this step into? Once again, resistance. See that? Look at the precision. Look at the precision.
Yeah.
Taps and instantly. Okay, it just melts. Okay, I'll show you more. Look at this. Where did Asia tap into? Open close level. See that? Open close level. So let's see. Let's see some more. Where do we have clear examples? Yeah, look at this one. Where did this tap into? Here, before falling. But yeah, it did give a bit of drawdown. But yeah, it still fell. Look at this. Where did this tap into? Here. See that? Keeps on happening. Okay, keeps on happening. Let's see. Let's see some more. Look at this one. Where did this tap into? Use the line chart. You'll have your answers. Resistance. See that? Where did this one tap
Yeah.
into? Where did this one tap into? Use a line chart. What is this? Resistance. Where did this one tap into? Where did this one tap into? Line chart. Resistance. What happened?
So many entries.
So many entries. And also, once we go into trade in ranges, okay, properly, you will see that once you take your entries here, you're not just going to randomly close it with 10 to 15 pips. Okay. Once you understand the range, if you take sells here, your final target is here. Okay. You will see that. Okay. Because from internal to external range, liquid and not only that. Okay. Now, where do you think this one tapped into? No idea on this time frame, right? This one right here. No idea. Okay, so that's why we do the multi-time frame analysis all the time. Once again, I'll show you how to use the time frames. Okay, I'm only showing you examples of the POIs. What do we have on the daily? Resistance. Can you see that? The A formation.
Yeah.
Right here. Okay, now if I go back to the 4-hour time frame and go to the candlestick, look where price is tapping into before falling. There it goes. Look at that. Can you see that? Like you see the precision, right? You see the precision from these
Yeah.
levels. Okay, these levels are very strong. These support and resistance levels. Okay, so let's see. Let's see some more. Yeah, even this one. Where is this tap into before falling? These areas. Open, close levels. See that? Open, close levels. Look at this one. Look at this one. Once again, we have this setup. Can you see this? See that?
Yeah.
Stop punt, breakout structure, strong high, liquidity, resistance. Can you see the resistance in here? What
Yeah.
happened? Look at that. No drawdown. Look at the entry. Tapped and
Sniper entry.
melted. Sniper. That was news. Okay, I'll show you. I'll show you some more. Let's see. Let's see. Yeah, look at this. This right here. Okay, this right here. This was another example. We'll have to go to the daily to understand this one. I'll show that to you later. Okay, but I'll just show it to you right now. To go to the daily. What is this? What is this? This is an order block, right? That's push down before the push
Yeah.
up. What is the order block? Is it this? Is it the whole candle? No, it is the opening price of this or is the closing price. Can you see that? Okay, can you see that? And then, yeah, I'll just show you a little sneak peek of what we do. What is this? Asia. Asian lows liquidity right above the daily point of interest. Can you see that? What happens?
Yeah.
Look at this. Asian low taken out. Boom. There it goes. Can you see that? Where did it tap into?
Yeah.
Where it tap into? Into a daily zone. But once you take a sniper entry from here, will anyone know where it came from? No idea, right? Out of nowhere. Out of nowhere. So that's why I told you it's a price level that we're dealing with. Okay, we are dealing with price levels, not candles, not wicks. We are dealing with price levels. Okay, so I'll show you some more. Yeah, we were going through this. Let's see proper levels. This tapped into the order block. See now, I told you, what is this? A support, right? This will be a
Yeah.
support. Once it breaks, what will it be? It will be a resistance. This is what I told you, right? This is what I told you.
Yeah.
This is exactly what I told you. So then you can mark it out like this. Now, if I put the replay tool here, not here, maybe here. Okay. What is this? This is a support. V formation. See that? V formation.
Yeah.
But once it breaks, see that? Now it is broken. Once it breaks, what happens? It will act as a resistance. Now look at the reaction from that same line. There it goes. Can you see that? Okay, so
Yeah.
this stuff should be marked out on line chart. That's the thing. Okay, this is not the YouTube stuff. Okay, this is very different. This is very different from those stuff. Okay, so I'll show you more. Yeah, same thing. And once a resistance breaks, what happens? First, it will act as what? A resistance. Once it breaks, you know what happens? It will turn into a support.
Support.
Okay, so let me show you an example of that real quick. Yeah, in here. Okay, what is this now? A resistance, right? This will be a resistance.
Yeah.
What happens now? It's broken. Not yet. There it goes. It's broken. Can you see that? A resistance is
Yeah.
broken. Then what will it do? It will act as a support, right? It will act as a support. No. Do you think anyone will have an idea what we're using if we draw a line like this? They'll think it's an imbalance. No. But what happens? Look at this. There it goes. Taps and flies. See that? Resistance breaks,
Yeah.
turns into a support. Okay, turns into a support. Can you understand the new way of marking out the POIs? Let me know before we move on. Is that clear?
Yeah.
Was that clear? Okay, yeah. I know, like, even though you tell me it's clear right now, when you go into the charts, you will have questions. You will have so many questions. Okay, that's okay. That's okay because, like, I'm showing this to you because I've been doing this for a long time. So, and I've been teaching for a long time. So, I can show the same examples again and again and again without even opening charts, without even opening charts. Okay, but the thing is, I can't fake this thing, right? It's the same chart we're
Yeah.
dealing with. I'm showing. I'll show you. I'll Let's backtest all of this price action. I'll show you what happened. Okay, I'll show you what happened and all that stuff. So yeah, you understand this, right? About the POIs. Okay, you understand about the POI. See, like even in here, even though it did not give us the sniper entry, where did it tap into? Resistance. See that? Tapped
Yeah.
and melted. Like look at this. This is Monday. Okay. What is this? What is this? Open close levels, right?
Yeah.
We did have a resistance in here, but I'll tell you why we use this. Because on a lower time frame, this is a strong high. Stop punt, breakout structure. Can you see that? It's a strong high.
Yeah.
Now, once again, do you think they'll tell you, oh, he used 50% of this week. But are we using that? No. You know what we're
No.
using. Okay, so look at the entry. Taps and melts. See that? It happens. Okay, it happens all the time. Okay, so now let's get back into that example. But now you understand it, right? Support, resistance,
Yeah.
support broken turns into resistance. We call it SBR. Resistance broken turns into support, RBS. Names aren't necessary. Just understand the logic behind it. Once the A formation breaks, it retests. Once the V formation breaks, once again it comes up, retests, and then fall. Okay, so something like that. Okay. Now if I get back here, so now you know what to do, right? Once you spot the liquidity, what are you going to do? You're going to go into the higher time frames to check what your point of interest is, right? You'll go into the higher time
Yeah.
frame. So because the thing is now, let's say you had a daily zone in here, but a very clear 15-minute order block in here. Are you going to take the trade from the 15-minute? Never.
No.
You'll get stopped out for sure. I can guarantee you that for sure you're getting stopped out. Okay, so always make sure to focus on the higher time because I showed you an example of this, right? Once you use the 1 hour, you get stopped out because why? There's a 4 hour zone above it. Okay, so something like that. Yeah, now what could happen is now the market might start to come up. Once it gets here, it might give you reaction. So what happens? Everyone is hyped up about their trade, right? Like posting it on
Yeah.
Instagram, saying it's already 1 to 2 and all that stuff. Okay, but then all of a sudden this happens. Everyone stopped out. Everyone that wanted to sell here gets stopped out. Okay, so now what is this? This was a manipulation, right? It was a manipulation of the sellers, right? But remember,
Yeah.
it wasn't just a manipulation of the sellers. It did something important too, something else that is important. What is that? The market was doing lower highs and lower lows. Now, all of a sudden, you have a move like this. What would you think? Now, you might think it's a bullish breakout structure, right? You might think it's a
Yeah.
bullish breakout structure, but that's the thing. If you consider it to be a bullish breakout structure, that is the inducement we're talking about. That is the trap. Okay, people are induced into believing that this right here is a breakout structure point, but it's actually not. Okay, so same exact thing. So people might think it's a breakout structure point. So now when price starts to come down, everyone will start to look for buys from somewhere around here, right? Why? Because they thought that it's a bullish breakout structure. But no, once we go into ranges, you will understand that this right here wasn't really a breakout structure. This was a sweep of internal range liquidity because the current range we had was from up here to down here. And this right here was only internal range liquidity, not a bullish breakout structure. Okay, so now what you could do is like what I personally do is let's say we had a daily zone in here. I go to the 4 hour and then see if I could refine it a bit to the upside. Then I go to the 1 hour and see if I could refine it further. Then I go to 30 minutes, see if I could refine it further. Go to the 15 minutes, see if I could refine it further. But remember, like I'm not gonna move a daily level here. That's too much. Just you saw that. You saw how we do the refinements, right? Just slight
Yeah.
refinements. Okay, just slight refinements. And then what I do is I'll sell it. Sometimes my stop loss will be above the lower time frame point of interest, or else just the standard 5 pip stop loss. But if you are new to this, I'll tell you, please make sure you have your stop loss above the strong high. Have it above the strong high. Because the problem with this is once you have a tight stop loss like this, sometimes the market will wick you out and then fall. So you're falling into victim just like these traders. Okay, so if you have it above the strong high, there's a very little chance of you getting stopped out. Okay, but I know the risk to reward will not be that good. Like the stop loss will be big, but yeah, if you want an increased win rate, put your stop loss above strong high. Place your stop loss above strong high. You'll see what happens. Okay, so yeah, from internal range liquidity, where do we target? External range liquidity. Okay, so yeah, then it could come down, might react from these areas, might consolidate. Why? Because there are people who wanted to buy it here, right?
Yeah.
And then this. See that? This is what would happen. So the best thing to do is take your entry above the pool of liquidity, from above the pool of liquidity. Okay, can you understand this scenario? I hope it's clear. You understand this, right? A simple example.
Yeah.
Okay, what? Yeah, the only thing what I wanted to show you was this setup right here. Okay, this, this. This is what happens. Okay, and about the POIs. You understand that, right? Resistance, support, SPR, RBS, whatever. Okay, you can call it open close levels, support and resistance, order blocks, breakers, rejection blocks, all of them refer to the same thing. Okay, but something like that. And then same thing in a bullish market. And yeah, I showed you a practical example of this stuff, right? You saw how the market was creating high highs and higher lows. Everyone will
Yeah.
be expecting a higher low from here. So they're buying it here. But we enter where? From where they place their stop loss at, like this. And then we target the external range liquidity. Okay,
Can we do a ping pong stuff?
you can do ping pong stuff, but trust me, once you do the ping once you do that stuff with your live account, you'll be frustrated. You'll be stressed.
Oh,
Okay, because think of it, you're like, why did you choose trading? That is to live a stress-free life, right? Just to live freely,
yeah,
right?
yeah,
So if you are glued to the charts trying to look for trades all day, like all day, where's that freedom? So why would you want to do this ping pong stuff, right? Just one or two trades a day. If you manage to get a proper trade, I'll show you a very consistent setup that plays out during the London session. Okay, that will be our signature setup. Okay, that will be the textbook setup that we're gonna trade all the time. Okay, so for that, you have to be active during the London session. Okay, you have to be active during the London session. And yeah, I'm pretty sure you can be active during the London session, right? What's that? That's 12:30 p.m. our time. Okay, so we can like sleep until at around 10 a.m. and still come to the charts and take a trade during the London session. So that's the thing. Like we live in the
yeah,
best zone to trade with the time we are.
yeah, yeah,
Okay, so we can trade London and New York, both of them very easily. But for the ones that are
yeah,
in London, they can't trade the New York session. For the ones that are in New York, they can never trade the London session because why? That's around 3 a.m. their time. Okay, so that's the thing. We are in the best times to trade. So I'll show you something that plays out very consistently during the London session, and let's go along with that. Okay, so don't get into that ping pong stuff. Just forget it completely because it's very stressful. I've done that and no, don't do that. Okay, we'll just focus on one setup a day. If we get that, we're out. We're done for the day. Okay, so that's how you can build the consistency. So yeah, you understand these setups, right? I hope it's clear. Okay,
yeah.
so yeah, now I'll show you that setup I told you about that plays out during the London session. Okay, so yeah, from the previous videos, I have gone through it a bit. Okay, but I'll show you today. Let's go through it deeply. Okay, let's talk about that deeply. Okay, but before that, just give me one moment. I'll have some water and come. Okay, give me a second. Okay.
Okay, okay.
Can you hear me, bro? Yeah. Okay. So now let's talk about that London Open setup I told you about. Okay, so for that you have to understand Asia. Okay, you have to understand about Asia because now you would have seen that most of the time Asia does not Asia does not move a lot, right? Asia does not
Yeah.
move a lot, right? It can. I'll tell you what to do if it moves a lot. Okay, but most of the time, what happens is Asia just consolidates, right? Like it's in a consolidation phase. So let's say this right here was the Asian session, like this. Yeah, let's say this is Asia. Now, what happens? Now, there are these breakout traders, right, who are expecting moves like this. In case if the market breaks above the Asian high, they're expecting the whole day to be a bullish day.
Bullish.
Okay, same thing. If it breaks below the Asian low, they're expecting the whole day to be a bearish day.
Bearish.
Okay, so this is what they're expecting. So what they do is above the Asian high, they place buy stops. Okay, below the Asian low, they place sell stops. Because why? Either way, it doesn't matter where the market will go, they think they can make the money. Okay, they think they can make the money. But now there's smart money, right? There's smart money. So what will they do? They know that there's a pool of liquidity resting above this high. Okay, they know that there's a pool of liquidity resting above and below the Asian high. So what they do is now remember Asia always ends at the New York midnight time. I'll tell you the times that I use because what's the date today? It's the 6th, right? Yeah. So from today
Yeah.
onwards, New York, like US, also will change their times. Okay, so
Oh,
for like I'll tell you. Let's talk about timing once we get into charts. Okay, so from today they're changing like the daylight savings time will change. Okay, so from today New York's kill zone will be at 5:30 p.m. New York session will be at 6:30 p.m. Okay, so it goes forward by 1 hour till I think March or May. I do not remember. Okay, so let's talk about that later. But yeah, now Asia ends at the New York midnight time. And after the New York midnight time, what happens is it might, yeah, do something like this. What is that? The false run in the opposite direction, or is the Judah swing, right? The Judah swing.
yeah.
Now, what happens? Everyone starts to buy this, right? Like, because you can see this happening all the time. Trend lines are forming. Okay. Maybe these bullish trend lines are forming, or else maybe order blocks are forming. Okay, because why? Everyone would say that, okay, there we go, breakout structure. So let's expect a move like this. So it makes sense, right? This is what everyone would expect. But what happens is when the market opens above Asia, okay, so remember for this setup, the main thing we're focusing on is timing. Okay, timing. We're going to use time and price because everyone talks about time and price, right? But no one knows how to use it. Okay, so today I'll tell you how to use time and price properly. Okay, so timing properly. So because time is very important. So what happens? It goes up. So if the market opens above Asia during London Kill Zone or London Open, what can we expect? Boom, for it to reverse. Okay, so what we do is above the Asian high, we look for a higher time frame point of interest where London Kill Zone or London could get into. Okay, London Kill Zone or London could get into. So because what makes this a high quality point of interest is the Asian highs liquidity. Okay, and remember one important thing to note is that you're not just going to randomly sell above Asia or buy below Asia. No, this will be a very high probability setup to go with when the overall trend or is when the major trend is what? Bearish. Can you understand that? Okay, you're not just going to
Yeah.
randomly buy below Asia. Okay, or sell above Asia. When the market is bullish, are you going to sell above Asia? No. Okay, so you're going to just don't fight the trend, okay, because as the saying goes, the trend is your friend, right? You have to go with the
Yeah.
trend, not against it. Whenever you try to go against it, it will knock you out. Okay, so you must try to go with the trend itself. So when the market is bearish, this will be a very consistent setup to go with during the London session. Okay, during the London session, this will be a very consistent setup to go with. Okay, so this will be the first type of setup. I'll show you examples. I'll show you so many examples, then you will understand. But you understand this, right? You understand the logic behind what's happening in here. Okay, so that
Yeah.
is what we would do. And same thing in a bullish market. Okay, so what would happen? Now, after the New York midnight time, the market might start to calm down. So what happens? Everyone would expect a bearish day, right? Everyone would expect a bearish day. Maybe trend lines are forming like this, or maybe order blocks are forming in here, supply zones are forming here. Everyone is expecting this to happen. But are we expecting that? No, when everyone is expecting a bearish day, we know that since London has opened below Asia, this was a manipulation, so we can expect it to fly up. Okay, we can expect it to fly up. So once again, what makes this a high quality point of interest is the Asian low's
Liquid.
liquidity. Okay, and another thing to note is that you're not just gonna randomly buy below Asia. You're gonna do this when the overall trend is what? Bullish. Okay, when the market is in an uptrend. Okay, when the
Yeah.
market is in an uptrend, this is when you look for this setup. Can you understand that? This is when you look for this
Yeah.
setup. Like when, let's say the market is bearish, can you just randomly expect this to happen? No. Okay,
No.
try to ride the trend itself. Never try to go against it. Okay, so this will be the first type of setup. You understand this, right? Because I have talked about this during the previous sessions too, but today let's go deeply into it. Okay, I'll show you how to use this in combination with the ranges. Okay, I'll show you. So you get this, right? So this will be the first type of setup
Yeah.
to go with during the London session. Now, there's another type of setup. Okay, there is another type of setup. So something like this. Let's say Asia has done this. What has Asia done? Created a strong low. Can you see that? Asia has
Yeah.
created, I'll show you examples. Okay, so these are just drawings. I'll show you examples that way you'll understand. Okay, so what has Asia done? Asia has taken out liquidity and broken structure. So what did we do when Asia wasn't strong? When Asia was consolidating, we were expecting London to take out Asia, right? We wanted London
Yeah.
to take out Asia, a manipulation of Asia. But remember, when Asia is strong, can we expect London to take it out? No. Okay, when
No.
Asia is strong, remember, keep this in mind. Okay, when Asia is strong, specifically on the 4 hour time frame. Okay, on the 4 hour time frame, an order block or else a rejection block will be created. Okay, on the 4 hour time frame, an order block or else a rejection block will be created. Okay, so an order block could be here, a rejection block could be here. So what London Killzone or London Open does is it's not going to do this. They're not going to do this. Once again,
Yeah.
remember for this setup too, we're focusing on timing. Okay, London Killzone or London Open will come into either one of these zones and then go up, give you a continuation of this bullish move. Can you understand? So this right here, this mitigation happens during London Kill Zone or London Open. I'll show you examples. Okay, so like what I personally do is when there are two or more POIs from the top zones, I'll be waiting for a confirmation entry. So what's the confirmation entry? 50-minute time frame is the lowest time frame I use. I want to see price getting into this level and breaking structure on the 50-minute. Okay, if the 50-minute gives me a breakout structure, I'll be willing to take the confirmation entry like this. Okay, but if it fails, if it does not give me any reaction, I'll directly buy it from the bottom point of interest, from the extreme one, like this. Can you understand that? So always remember, when
Yeah.
there are two or more POIs, you're not just going to set buy limits on every one of them. No, okay. You, like, from the top ones, you wait for reactions, you wait for confirmations. But if price is not giving you any confirmation, we're buying it from the extreme point of interest right away. Okay, so this will be the second type of setup. So remember, this mitigation must happen during London Kill Zone or London Open. Can you understand it? Okay, so it must happen
Yeah.
at that time of the day. I'll show you examples. Okay, so this will be the second type of setup. You get it, right? Okay, that's right. And here, same thing in here. When Asia creates a strong high, you're not going to expect London to run above Asia or below Asia and do all that stuff. No. Instead, I told you, when Asia creates a strong high, go to the 4 hour time frame. Okay, on the 4 hour time frame, an order block or else a rejection block will be created. Okay, so what London Killzone or London Open does is it comes back up, mitigates that point of interest, and does not manipulate Asia. It mitigates Asia and then give you a continuation of this bearish move. Can you understand that? Okay, so when there are two or more POIs, I told you, from the bottom one, you wait for a breakout structure on a lower time frame, a break like this. If you get this, you get the confirmation entry, or else you sell it from the top point of interest right away. Okay, so this will be the second type of setup. Can you understand that? Hope it's clear. Okay,
Yeah.
yeah. Now the next thing, when there is news, okay, when there's news during the New York session, like high impact news like FOMC or as NFP or these ISM services or something, or CPI, PPI or something like that, you can't expect London to do the major move. Okay, remember that very well. When there is news, you cannot expect this to happen. Asia and London. You can't expect London to do this when there is news. Can you understand? Because when there is news, news makes the major move of the day. Okay, news or is the New York
Yeah.
Open is going to do the major move of the day. So what normally happens is when there is news in a bearish market, Asia might consolidate, London might shoot up. Don't worry, it will also consolidate. Okay, it will also consolidate, and then like they're building up liquidity like this, and then news will do this. Can you understand? So something like this is what happens when there is news. Asia, London, New York. I'll show you examples. I'll show you examples of all of this. Okay, so can you understand this? This is what would happen.
Yeah.
Okay, this is what would happen when there is news. And same thing in a bullish market. Okay, so Asia might do this. You're not going to expect London to take out Asia and then fly because why? There is high impact news. Okay, London will also lose its momentum, mess around. New York is the one that's going to give you the major move. Okay, so this will be the third one. Okay, so this is not that important because if you fear trading news, don't even look into it. Okay, just stay out. But yeah, this is what would happen. This is what would happen. Can you understand this? Okay, hope it's clear.
Yeah.
And then finally, when Asia is trending, okay, remember when Asia is trending, like without creating any strong highs or lows, let's say Asia is moving a lot because you know that, right? When the market opens, so many manipulations happen. If Asia is moving too much, like once you come into the charts, you'll see that, right? If Asia has moved a lot, no. If Asia has moved too much, stay out of the charts because that day's London Open setup or the London kill zone setup will not be that clear. Okay, it will not be that clear because sometimes London might do this, sometimes it might do this, sometimes it might do this. We have no idea what London is gonna do. Okay, so when Asia is moving
Yeah.
too much, just stay out. Just pick some other pair if you really want to trade. Okay, because London setup will not be that clear. Okay, so these will be the different type of setups that we're gonna deal with. Okay, I'll show you examples. So you get this, right? You get this. And
Yeah.
the reason I tell you to trade London Killzone or London Open is because remember, mainly for GBP USD and Euro USD, London Killzone or London Open has the most chances of making the high or the low of the day. Can you understand that? Like, for example,
Mm.
if you manage to get in on a trade like this during London Open, 95% of the time, this will be the high of the day. So, like,
Yeah.
what are the perks of catching the high of the day? You're in profits for the next 24 hours, right? Okay, so
Yeah.
that would be something like intraday to intra-week trades. Okay, so something like this. So remember, when the market is bullish, if you, I'm sorry, when the market is bearish, if you like manage to get in on a sell from above Asia, you can expect it to be the high of the day because London kill zone or London open sets the high or the low of the day. If there is no news, okay, remember that very well. So same thing in here. If you manage to get in on a trade like this when the market is bullish without news, 95% of the time you have gotten in on the low of the day. Okay, so something like that. So you get this, right? Now I'll show you examples. Yeah, even news, what did it do? What's that? A manipulation of Asia and boom, started flying. Okay, so this day I did have a setup. Okay, I did have a proper setup, but I did not take it because timing wasn't that good. Right above Asia, okay, yeah, not here. Right above Asia, what can you see? What is this? Open, close level, rejection blocks.
Yeah.
See that? Okay, so look at the reaction from this. Okay, look at the reaction from this level. I had it marked out, but if London, like we had news too, so I did not want to take the trade. I had this zone marked out, did not think it would play out, but look at what happened. Okay, whoa, there it comes into the Asian low. Can you see that? So ignore this move. Okay,
Yeah.
like yeah, we couldn't get in on the buy. Let that go because you don't have to get in on the major move every day to like make money, right? If you just get in on a sell like this and then have proper targets, you're done. Like this. So let's say you sold it here. Let's say you sold it here with maybe a 5 pip stop loss and you targeted the Asian low. You have 100 pips. What more do we need, right? 100 pips. Okay, so
Yeah.
a move like that. Okay, so let's see some move. This day, of course, I have no idea what happened. Let it go. Okay, let it go because we had news coming. Okay, we had news coming, but at the time when news was coming, London has dropped so much. See, that's a week. We can't expect news to just suddenly do this, like run above Asia and then fall. Okay, so just stay out. Look at this one. What happened here? Asia. Look at these London highs. Never went above Asia. Why? We have high impact news coming during the New York session. So
Yeah.
who made the high of the day? News. Okay, this was
Yeah.
FOMC. Okay, this was FOMC. So when this happens during news, you will know what happens. Okay, this is what happens all the time. Shoots up and then it comes down. Okay, why is it coming down? Because the market is bearish due to the major breakout structure. Okay, and yeah,
Yeah.
I told you, right? What happens? What happens when there is news? I told you, Asia will do this, London will do this, news will do this. I told you, right? Look at this.
Yeah.
Asia, London, news. Same exact thing. But now you might be wondering, okay, where did this tap into? Where did this tap
Yeah.
into? Let me show you. Multi-time frame. Okay. Go to the daily. What do we have? Once this breaks, what will it act as? Resistance.
Resistance.
Right? Resistance. So now use a line chart. A support is broken. What will it do? It will act as a resistance.
Resistance.
Draw a line. Go to lower time frame. Let's check what's gonna happen. Okay, look what's gonna happen now. Okay, go to the 50-minute maybe. There we go. Liquidity building up below it. Expect news to come here. Okay, expect news to come here, not London, because we have high impact news coming. Because let's see. If I go to the Forex factory, this is the first. Yeah, look at this. On Monday, let's check Monday. Hmm, this is October. Oh, let's see Monday. Give me a second. 1st of November to, let's say, maybe 10th of November or something. Okay. Where is Monday? We can't find Monday. Ah, that was 39th, right? I'm sorry, 29th of October. Give me a second. Yeah, 31st of October. There you go. Now, can you see this? This day on Monday, we do not have any high impact news during the New York session. Okay, so we
Yeah.
can trade the London session safely. But on Tuesday, what do we have? High impact news. See that? ISM or some, I don't know the names, but just look for the red folders. That's more than enough. Okay, so we have something. So we have something now. This is Tuesday. So can we expect London to go above Asia and then melt? No. We expect news
No.
to do the move. Okay, so yeah, what I did was this. Sold it from the daily point of interest. You saw what the daily point was, right? Now,
Yeah.
yeah, what is that? That was a daily, was that SPR, or is support broken turns into resistance, or else it's a daily order block. Okay, it's simply a daily order block, whatever. And then you target the Asian low or else external range liquidity like this. Okay, so what happens? What happens? Look at this. Okay, not yet, not yet. Patiently wait, patiently wait. There it taps. Where did it tap into? Do you think anyone will have an idea where it tapped into? Like when you have
No.
all this stuff in here, you had an odd block here, you had an odd block here, you had order blocks here. Why this? You see why that is, right? It's a daily level. It's a daily level. Okay, so there it goes. Taps and then there it comes. Boom. Can you see the entry? Okay, so this
Yeah.
Asia, London, news. Exactly that is what happened. You saw that, right? Same exact thing. Okay, so that was Tuesday. That was Tuesday. Let's see some more. Look at this one. This day, what did Asia do? Asia created what? A strong high. Can you see that? Asia has created a strong high, and we are safe to trade the London session this day because see, this is the 31st of October, and that was a Monday. We had no news, no high impact news, right?
Yeah.
So we can safely trade the London session. So now, what has Asia done? Asia has created a strong high. So when Asia creates a strong high, where will our focus go into? I told you to the 4-hour time frame, right? Let's go to the 4-hour.
Yeah.
What do we have? What do we have? A rejection block, open close levels. Can you see that? Okay, we had this open close levels in here on that strong high itself like this. And then timing. The next thing is timing, right? I told you. At what time of the day are we expecting price to get here? London kill zone was at
London kill zone.
11:30. Yeah, London kill zone was at 11:30. Or else London session that is at 12:30, right? At 12:30. So look what happens. Okay, patiently wait. Can you see what happened? In
Yeah.
between that time of the day, there it gives you the mitigation. Okay, gives you a mitigation. Stop loss. Yeah, mine was around a 4.2 pip stop loss with spreads. Yeah, something like this.
Actually, I have a questions.
Yeah.
I have a question. What is the timing of Asian session?
Actually, I'll tell you because right now the times are changed because I told you the New York times are changed.
Daylight saving.
Yeah, daylight savings because those days, like on October until the 6th of November, this was the time I used 2:30 to 9:30 a.m. Indian time. Okay, but right now Right now it's different. Okay, right now it's different due to the daylight savings time change. I'll tell you. Okay, I'll tell you. Just if when you're marking out Asia, set your time to New York time and then mark it out from 5 p.m. to New York midnight time. Can you see that? 5 p.m. to New York midnight time. So when you're marking out Asia, always mark out from 5 p.m. to New York midnight time. Okay, so something like that. Okay, let's see. Hmm. Now you see what happened here, right? In between that time of the day, there it gives you the
Yeah.
mitigation. First target will be what? The Asian low. Second target will be the external range liquid. So what happens? Look how quick the move is. Boom, you're done. If you're done with the Asian low, you're done. Or else leave the rest into the external range liquid. Why once again to the external range liquid? Because major breakout structure bearish, which means London
Yeah.
will push it down once again to the external range liquid. So what happened? What happened? There it melts. See that?
Yeah.
You see what happened there? Okay, so something like that. Okay, so I'm not gonna say it's easy. I'm not gonna
A
say it was
wall
a
for
very
the
easy
week.
setup. Yeah, just what? Yeah, if you risk 1%, that's all you need for the week. Okay, that is all you need for the week. Okay, so this day, of course, I have no idea what happened, but I'll show you. Yeah, once again, this was a trade one of my students took, not me. Let me put the replay tool in here. Yeah, he
You
was the
have
one who
a
sent
group
me.
or something?
Yeah, like I just personally deal with them. I do not use groups because groups are not my
Oh,
thing. So, yeah, what is this? Took out the Asian low, came down and created a strong low. Stop hunt, breakout structure, or a break in here.
we can trade on the 15-minute time frame.
Yeah, you can trade on 50 minute times. That's fine. But you have to know the higher
Oh,
time frame direction. Okay, I'm only showing you this example. Okay, nothing else. So what happens now?
oh,
Liquidity. Right below it, what do we have? A support. Can you see that? We have this
yeah,
formation once again. See? So what happens? Now you can buy it here if you want. I did not do this once again. Okay, I only saw this once. He sent it to me. What happened? There it taps and flies right away. See that? Takes out the low and then there it goes up. Cool. Okay, so I had no trades this day because this was a bit late though, because this right here happened right at London Open. Okay, this move happened right at London. I just wanted to take a direct trade. I did not know what the point of interest was, so no trades for me that day. Okay, I'll show you the losses too, because not only the winning trades, because even with this you will take losses. I have to show you that too. Not gonna like sell dreams. I'm not gonna tell you every single London Open you're gonna win. No, you will
yeah,
lose. You will lose. Okay, so can't help it. Okay, so I'll show you another one. Look at this. Below Asia, on the 4 hour time frame, we had a support. Can you see that?
yeah,
We had a support, but we were inside of a daily order block this day. So price can still push down, right? Look at that. We were inside of this whole thing.
yeah.
So there are chances of it pushing back down, right? So is it safe for me to like buy inside of a inside of a bearish order block? Not safe, right? So that's why
No,
I decided to do a confirmation entry. If I go to the 50-minute, what happened? Look at this. It came down into the 4 hour point of interest and did the stop hunt and gave the break. See that? So there we get the
yeah,
confirmation. So then what do we have in here? A support, right? We have a support. So what happens? Comes down, flies up. See that? Buy it here, stop loss
yeah,
here, target here, or else here. You're done. Okay, so something like that. I'll show you. Let's go to Euro USD. Let's check some examples on Euro USD because you might trade that as well. This day I have no idea what happened. Same thing in here. This day we had news, so you can see what happened, right? Asia, London, and New York news. See that news? Okay, so let's see. We were going through this stuff on GBP USD. Where did we stop? Yeah, look at this one. A very nice setup. Asia, London, New York. At what time does the New York kill zone open? 4:30 p.m. Right? Look at the move.
yeah,
Look at the move. 4:30 p.m. I told you, when there is news, okay, see, this was Tuesday. You saw how there was high impact news on Tuesday. When there is news, can you trade the London session? No, not
no,
safe. Okay, not safe. So the best thing to do is trade the New York session. So what happened? Asia, yeah, London, news. Boom. Okay, so look at this one. This was Monday. I showed you, right? There were no high impact news, right? There were no high impact news.
yeah.
So what has Asia done? Asia has created a strong high,
Strong.
liquidity taken, structure broken. So when Asia creates a strong high, where will your focus go into? I told you to the 4 hour time frame, right? To the 4 hour time frame. Let's go to the 4 hour time frame. What do we have? A resistance or else a rejection block. Can you see that? We had a
Yeah.
rejection block. Okay. Now, yeah, this day I was trading on MT4 with my phone. Okay. So then that day I saw on the 5 minute time frame, we had another resistance lining up with this level. Can you see this? 4 hour one is here. We can do a slight refinement of it into here. Can you say a
Yeah.
slight refinement? Okay. Slight refinement into here. And then what comes next? Timing, right? Timing. I told you at what time of the day should price get here? 11:30 or else 12:30. Now this was those days.
12:30.
Right now the times are different. I'll give you the times that we use right now uh, at the end of the session. Okay. And then most importantly, we have some liquidity right below the point of interest. Can you see that? A swing high.
Yeah.
Okay. And now one obvious thing is that the Asian low will get taken out, right? Because of the relatively equal lows. Can you see that? Okay. So then what we can do is we can sell it, target the Asian low. So that's more than enough, right? You have what? 37 pips. Okay. 37 pips.
Yeah.
Stop loss will be around 5 pips, the standard one, like this. Okay. So let's see what happened. Look at the timing. Okay. Look at the time. This is what we focus on mainly. Okay. So look what happens. 11:30. Right at 11:30. Can you see that? Tapped,
Yeah.
gave us a reaction, went back up. I got stopped out at break even. Okay, so very unfortunate day for me because at 12:30, once again, it went into that price level. See that? But eventually, I did come back into the targets. Did you see where the entry came from? Do you think anyone will have an idea where it came from? No idea, right? In the
No
middle
idea.
of nowhere. Okay, but can you see the precision? Like once I do,
Yeah.
like once again, I can't make these things up, right? You saw the precision. Taps and it
Yeah.
melts. Okay, like even if you did not do the refinement, even then you had a nice entry. See that? Even then,
Yeah.
if you use the 5 pip stop loss, you had a nice entry. So, like, it can't even get any better than this, right? This is enough. This is more than enough. Okay, so that's it. Okay, so let's see. Let's see some more. Look at this one. One of the cleanest days ever. I only managed to get in on the sell. Okay, but I had the buy marked out too. Look at this. What has the Asia done? Asia has created equal highs. Can you see that?
Yeah.
Oh. Okay, let me mark it out. And Asian low has created what? Equal lows. So now very obvious, right? Both of them are going to get taken out. Okay. So
Yeah.
now let me go to the 4 hour time frame. Let's check for POIs there because there was nothing on the daily, obviously. Let's go to the 4 hour time frame. What did we have? Below Asia, did we have any point of interest close by? No, because Asia has already tapped into the support that was in here during Asia.
Yeah.
And you can see that, right? But above Asia, what do we have? A rejection block or as the open close levels as well. Can you see that? You can see that, right?
Yeah.
We have that. So below Asia, nothing on the 4 hour. Then let's check the 1 hour. What do we have on the 1 hour time frame right below the Asian low? Support.
Yeah.
Can you see that? Support. Okay, so let's mark it out like that. And then what's the next thing we focus on? The final thing. Timing, right? Timing. Okay, so at what time? 11:30, 12:30. Can you understand this? Say, can you see how I'm
Yeah.
doing the same exact thing every day? Same exact thing. Okay, so what happened now? Hmm. Patiently wait until the time is right. There we go. Now we are interested in trading because London kill zone has opened. Now, yeah, I had this marked out, but I could not take the trade because I was focused on sells. Because why was I focused on sells? Because the major breakout structure was bearish, right? So the best thing to do is look for
Yeah.
sells itself. You see that, right? Okay, so we will go with sells itself. Okay, so stop loss can be placed where? Below this order block. 2.1 pips, see there? Below that order block. Still on the 50 week time. And where can you target? Asian high. Can you understand setup? You could have done this.
Yeah.
Okay, so what happened? Comes down. There it goes. Look at the time. Right at 12:30 on the dot. Okay, right at 12:30, there it taps into our point of interest. Asian low taken out, and then what happens? Oh. Done.
Fake move.
See that? You're done. But are you gonna hold the runners or anything? No, no, no. Don't trust it. Okay, do not trust these moves. Let it go. What I did was I sold it. Okay, I sold it. 5 pips stop loss. Where am I targeting? All these lows. Because why? We are still bearish. This right here was
Yeah.
only a fake move that happened with Lana. Who cares if it is fake or not, right? If you can make the money out of it. Okay, we don't care. Like if I managed to get in on the buy, I wouldn't even focus on the sell. But I thought the buys might be risky because the major breakout structure was bearish, so the market might want to come down. Okay, so something like that. So what happened? Done. The buy and the sell. You saw how quick it is, right? When the time is right. Because you don't want to
Yeah.
take a trade and then wait for hours until it goes into your targets, right? You know how frustrating that is because we're humans, right? If we are in a
Yeah.
trade, what do? Until it goes into the targets, we check the phone. Like, am I wrong? No, right? We do that. Even I do it. Okay, until it goes into targets, we check the phone, we check the computer, we check everything to see if
Yeah.
it is gone
Yeah.
there. Okay, so if you are trading, like let's say during the late New York session at around 11 p.m. or 10 p.m., you know that the market dies at that time, right? There's no volatility. So imagine if you take a trade at that time of the day, you'll wait until it's early in the morning until it goes into your time. But if you manage to take a trade at this time of the day, it's okay even if you
Yeah.
keep checking your phone because this is the time when the momentum kicks in. Maximum it will take only around 1 hour, 2 hours. Okay, 2 hours. Okay, so that's about that. So always make sure you try to trade during London kill zone or London open. So you
Okay.
understood both of those setups, right? The buy and the sell.
Yeah. Yeah.
You saw what happened.
Yeah.
Went below Asia, went up, went above Asia, came down. Okay, so why did it fall off? Because the market was still bearish. Okay, the market was still bearish. That was that day. Okay, so let's see some more. This day, of course, I have no idea what happened, but Asia created a strong low. So on the 4 hour time frame, let's see what was there. I told you what gets created on the 4 hour time frame when Asia creates a strong low. I told you an order block or else a rejection block, right? I told you
Yeah.
that happens all the time. So what do we have created during Asia? Order block and a rejection block. Okay. Or else in support and resistance terms, resistance broken turns into support and a support.
Yeah.
See that? So we have that. You can call it whatever you want to. And yeah, what can we expect London to do? Tap into either. I hate days like this because like I'm not good with these confirmation entries. Like I miss them. Okay, I miss them. So look at what happened this day. Okay, let's mark out the timing to 11:30, 12:30. Okay. Why are we expecting a buy now? Because Asia is a strong low, liquidity taken, structure broken. Okay, so what happens? Okay, there we go. Time is good. 12:30 comes the fake move right into the order block. Can you see it?
Yeah.
Right into the
Yeah.
order block. So I missed it because I was waiting for a confirmation. What happened? Fly. Oh, see that? Where did the move come from? Do you think anyone will have an idea? No, but you know where it came from.
No.
Right from the 4 hour order block. Okay, so you see the importance of higher time frames, right? I'll show you more.
Yeah.
Okay, higher time frames are it is the key, okay, not the lower time frames. This day I have no idea what happened. Asia was just trending because what I did was now Asia created a strong high this day. So you know what happens, right? We go to the 4 hour time frame and we mark out the order block and the rejection block. We wait for price to react from either one of these zones. But
Yeah.
London did not do that. So can I force a move? Like if London doesn't do that, can I push it up? No, right? Only thing I
No.
can do is just let it go. Okay? 11:30, 12:30. Was my setup clear? No, if my setup isn't clear, then why should I trade it, right? Just let it go. Let it go. That's why I told you. Just focus on one consistent setup, master it, because as you gain consistency, as time goes by, all you have to do is trade the same setup but with a bigger lot size. That's all you have to do,
Yeah.
right? Just
Yeah.
bigger lot size. Okay, so don't try to trade every single setup you see. Okay, that's where I will. That's the mistake you can do. Okay, so something like that. So let's see. Look at what happened here. Asia created equal highs. Look at the time of the reversal. Okay, 11:30, 12:30. At what time did they give you the reversal? Oh, into the Asian low. Can you see that? Right into the
Yeah.
Asian low. Okay, so that was that day. Let's see some more. Look at this one. Is the Asian high a strong high? No, right? So let's see.
No.
Now, I missed the buy. I took a sell though because of timing once again. Because right below Asia, what did we have? This a support, right? We had a support, and yeah, now very close to this, we had a resistance in here as well. But I took the risk from here on the H1 time frame. We had a resistance very closer in here. Can you see that? Okay, we had that.
Yeah.
And then what's the next thing we focus on? What's the next thing? Now remember, this was a very risky setup because there was a 4 hour resistance in here as well. You saw that, right? So
Yeah. Yeah.
when it is risky, you're not gonna risk the same amount you risk for all the other trades. No, you're gonna risk a little bit lower. Like common sense, right? Makes sense. So like this,
Yeah. Yeah.
11:30, 12:30. So if at this time of the day, if it's up, I'll sell it. If at this time of the day, if it is down, I'll buy it. Can you understand it? The importance
Yeah.
of timing. Okay, if it is below Asia, I buy it. If it is above Asia, I sell it. So yeah, this day we had to sell it because it was above Asia at this time of the day. We're selling it. Where do we target? Asian low, right? Asian low. You
Yeah.
can have like a 5 pips standard lot size. Okay, so what happens? Wait, patiently wait. There we go. 15 minutes early though. Can you see?
Yeah.
Taps. Okay, because don't expect it to be perfect all the time. Okay, like sometimes there'll be some issues, like sometimes it'll be a bit late, sometimes it'll be a little early like this. But yeah, eventually, like if you understand the logic, it is more than enough. Okay, so what happens? There it comes. Boom, into the targets. Can you see that? Even
Yeah.
this day was a break-even day because why? I closed it, I moved it to break-even in here, and then this bullshit happened. Can't help it that happens. Okay, so we can't help it. Okay, so let it go. You saw that, right? You saw what happened here. Okay, so that was that day because there was no news. Okay, there was no news. That is why we're trading this. Now this day, Friday, 14th of October. Let's check that day. I think we had some high impact news. 14th. What do we have here? News 6 p.m.
Yeah.
Is it safe for us to trade the London session? No,
No.
right? Not safe. Then what do we trade? We trade the New York session. Okay, so let's see what London structure has formed for us to trade the New York session. I'll show you a very nice example, like the setup I showed you. I told you about set up like this, right? I told you this. Okay, so
Yeah.
what happens here? What is this? Asia has created a strong high stop fund
Strong eye.
breakout structure. Okay, now I'll tell you what will everyone do? What will everyone do? Oh, choose the order block that broke structure, right?
Yeah.
That's the order block that broke structure. So once again, when it comes inside of that, sell, 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 sell. Every time the market structure breaks on a lower time frame, sell it. Okay. Supply and demand traders will tell you this is the supply that broke structure. Okay. They'll tell you
Yeah.
this is a drop base and a drop. Not only smart money and supply demand, who else? Trend lines. They're also selling it.
Yeah.
Are we doing that? No. This is internal range liquidity. Okay. And what do we have above it? A resistance, a strong one. Why? Because it is on a strong high and it has some major liquidity sitting below it. Okay, so look at this.
Yeah.
This is how you could have traded news. Sell. Okay, we can sell it. Stop loss where? You can have it around, like if you are new to this stuff, have it above the strong high. No problem because your targets are anyway the external range liquidity. Okay, so
Yeah.
even if you had it above the strong high, you have 10%. But I did not do that like I told you because I don't want 9 pips. The maximum I use is 5 pips like this. Okay, so look at the move. Can you see that? Right into it. Right into it and then done. Can you see that? You saw the setup, right?
Hold for the week.
Same exact setup. Yeah. 10% if you had it above the strong high. Isn't that enough? 10%, more than enough. Okay, but yeah, you saw the setup, right? The same exact setup I told you about. Just focus on the economic calendar too, so that way you know if it is safe for you to trade London or not. You saw that, right? The importance of the economic calendar as well. Okay, so this was that. Can you understand the setup for this day? Yeah, like you see why
Yeah.
we didn't expect anything to happen during the London session, right? Why didn't we expect that? Because why? We had like what did we have? We had some high impact news, right? We had high impact news. Okay, so yeah, that was that day. So let's see some more. Yeah, look at what happened here. We had Asia. See this? You can see this. We had Asia. We had a false run in the opposite direction. So at what time of the day are we expecting it to reverse? At London kill zone 11:30 or else at 12:30.
12:30.
So can you see what happened at that time of the day? Went below Asia and boom. You saw that? Okay, it started flying up
Yeah.
into the Asian high. Okay, so like, can you see the consistency of this setup already? It keeps on happening. Okay, it keeps on happening. So this day, of course, I missed the setup because not missed it actually. I was waiting for this to get taken out, this Asian high to get taken out because it was a long wick. I thought, okay, London might at least do a wick above it and then fall back. Nah, London went very close to it and then came back down for some reason. Okay, so I missed it. I missed it. Let it go. Look at this one. This day, it ran below Asia a little too earlier because at what time of the day are we expecting manipulations? 11:30 or as 12:30, right? I told you that's the time.
Yeah.
But now, a little too earlier, we got a manipulation of the Asian low. Now, I'm going to buy it this day. Why? Because I told you what? Liquidity is like a magnet, right? Where is the liquidity in here? Equal highs. What will London do? London is going to push up, right? Obviously. London is going to push up.
Yeah.
So where can you take the trade from? Now look at this. See, you don't even have to go to the 5-minute time frame if you understand these swing low and swing high formations and all that. This is a strong low. Why? Swing low taken out, swing high broken. What is that then? This is a strong low, right? That turns into a
Yeah.
strong low. So when a strong low is created on a lower time frame, where will your focus go into? Into the higher time frames, right? Go to the check. Let's check
Yeah.
the H1. We have two POIs on the H1. What's that? Order block and a rejection block, or as a support, and the open close price levels. Okay, so what are you
Yeah.
gonna do? Are you gonna buy from both of them? No, right? I told you you're not gonna buy from both of them. You're gonna wait for a reaction from the top one. Like you can even buy it here if you want to, and maybe take a loss and then take another buy here because if you are confident, if you are confident that price is gonna go up anyway, but we can't do that, right? So the best thing to do is wait for a breakout structure. Okay, or it's just buy it here with your stop loss here. Okay, so even if they tap here or not, you're still safe. Okay, so let's see. See that? No reaction from this zone. No
Yeah.
breaks, nothing. Patiently wait. What it did was it created this setup.
Yeah.
You know what happens when we had this setup, right? Stop hunt, breakout structure, liquidity above the point of interest, and what's the next thing? Timing as well. We have the setup we need. Asian low is manipulated. We have timing also in favor with our ones. Okay, so what happens? We're gonna buy it here. Okay, we can have like a 5 pip stop loss. Where do we target? Relatively equal high.
Asian eye.
Yeah, we target that. 46 pips, more than enough, right? So what happens? Look at this. Look at the timing. There it comes, and there it goes. See that? Did you see the setup? Can
Yeah.
you understand the setup? Not if you saw it or not. Like, can you understand what happened there?
Yeah.
You
Yeah.
understand that, right? Because equal highs, ran below Asia, strong low created, high time frame point of interest, liquidity above the point of interest, timing, boom. Okay, so same exact stuff I told you about. Okay, so yeah, that was that day. Let's see some more. Ah, I showed you a nice setup with news, right? The previous one. I
Yeah.
showed you something like this. Okay, I told you everyone like we had something like this. We had an order block in here. Everyone will tell you this is the order block that broke structure. Everyone is selling it here, stop loss here. What are we doing? We're selling it from above that, like this. That's what I told you, right? That is what I told you.
Yeah.
So look at this one. This day also we had news. So let me show you. This day also we had news. This was, what is this? This was on the 10th of October. Look at this. 10th of October. There we go. Yeah, but not this. Let's see if it was the 10th. Monday, 10th October. Oh, why is that? No, there was some news this day. Let's see, let's see. Because look at the week. Okay, look at the week. Now, what has the Asian high done? It has created a strong high stop fund breakout structure. Now, like I
Yeah.
told you, where will everyone try to sell it from? The order block that broke structure, the supply that broke structure, right? Drop base and a drop, or else trend lines. The same exact setup I
Yeah.
showed you earlier. But what are we going to do? Liquidity, right? And a rejection
Yeah.
block right above it. Open close levels. What happens? Hmm. Can you see the reaction? Look at the
Yeah.
reaction. Taps. Look at that. Just a wick. Just a wick. Okay, it taps and then it comes down. See that? Understand the setup, right? Okay, so same
Yeah.
exact thing, same exact thing. All you have to understand is the logic behind what I'm showing you. Then you will see what's happening. Okay, so look at this one. Clean. Okay, like very clean. One thing for sure is what? Asian low will get taken out, right? Equal lows. That's equal lows. So for sure it will get taken out. Asian high isn't a strong high as well. We can expect that to get taken out too. But I wasn't focused on buys because why? Major breakout structure is bearish. So the best thing to do is look for sells, right? Okay, so I wasn't
Yeah.
focused on buys. So below Asia, let's look for a higher time frame point of interest. What did we have on the 4-hour time frame? A support right below Asia. Okay, and use a line chart. Once again, you find this setup. See that?
Yeah.
Strong low. See that? Stop fund breakout structure, strong low. Liquidity. What is liquidity? Asian low.
Asia low.
And then what's the next thing we take into consideration? Timing, right? Mark that out. Go back to the charts and yeah, let's look for a point of interest above Asia too. Did we have anything on the 4-hour? No. The next point of interest was all
No.
the way up here. You see that? Too far away. But if you go to the H1, we had a resistance right above Asia. Can you see that? A formation. Do you think anyone will have an idea where our entries are coming from?
No.
No idea, right? Just A formations, V formations. No one will know what it is. Okay, so yeah, we have it like this. And then what's the next thing? I told you timing, right? It should come at 11:30 or else 12:30. Okay. So at this time of the day, if it is above Asia, we can sell. If it is below Asia, we can buy, but buys are not that good because of this break. Okay, but I did not take the buy. I only took the sell once again. But look at how the buy played out. Okay, time is good. Can you see how it is melting? Below Asia.
Yeah.
Okay. There it turns. Taps right into that 4-hour level. Can you see it? Reversing right away. So you could have bought it here. Now you see why this is risky, right? Because the major breakout structure was bearish. And now I told you what happens after the New York midnight time. You might get a false run in the opposite direction. I told you order blocks are forming. Everyone is selling it here. Trend lines are forming. Everyone is selling it here. But what do? We target the Asian high. Can you understand that? We target it.
Yeah.
Okay. I did not take the buy once again. I only took the sell. Let me show you. So there it goes. See that? Can you see the setup? Ran below
Yeah.
Asia. Time is perfect. Remember, this is the golden hour for GBP USD and Euro USD. This is the time you look for trades. Okay, because very quick,
Yeah.
very quick. Okay, especially when there is no news. So I did not manage to take the buy. I only took the sell. Let me show you. Like this. Sold it here. 5 pips stop loss once again. And I targeted the external range liquidity like this. Okay, so what happened? Taps. There it comes. Below Asia. And then another drop. You see that, right? Look at the
Yeah.
precision. Look at the precision. Do you think you get this on the 1 minute time frame? No, not
No.
not even on the seconds time frame. Okay, you can't. So that's the thing. It has like shit has to be done on the higher time frames. Okay, not the lower time frames. Okay, let's see. This day, of course, I have no idea what happened because like this Asia was clearly equal highs, right? Can you see that? It was clearly equal highs. I was expecting London to do this and fall. But nah, it just London just continued this bearish moves down. I don't know why. Let it go. Look at this. At what time of the day did the reversal come? Asia, 11:30, 12:30. What happened at that time of the day? Ran above Asia, melted. So same this formation. Asia. Oh, can you see
All
that?
run in opposite direction.
Yeah, everyone goes in the opposite direction. Everyone starts to buy this thing. Maybe they might tell you they will get a bullish breakout structure. And then, yeah,
Yeah.
like in here, they'll tell you that's a bullish breakout structure. So then they'll wait for these lows to play out. Maybe they'll mark these out as POIs, wait for this to play out. But do you think this will play out? No. At this time of the day, price was above Asia. Then what happens? It will melt. It will not give any reaction from here. Maybe once this breaks, it might act as a support and then tap into that. Yeah, might once this breaks, it might act as a resistance. Yeah, didn't even get there because so much bearish momentum. But you see the setup, right? I hope you understood that. Okay,
Yeah.
so yeah, let's see. Ah, this still what happened? Yes, I missed it. I'll show you. I'll show you why I missed it. Okay, because timing too early. Okay, the setup played out too early. So I did not want to take a trade. So what happened? Asia created what? Strong low. Liquidity taken, structure broken.
Breakout structure.
Okay, so where will our focus go into? I told you 4-hour time frame, right? Go to the 4-hour.
Yeah.
What do we have on the 4-hour? Rejection block only. So you can directly take the trade, right? No order blocks,
Yeah.
just the rejection block. Okay, and then what's the next thing we focus on? Timing, right? It has to happen at 11:30
London.
or else at 12:30. So I told you, like, this time of the day is when I look for trades, but this happened, okay? Not that. Tapped once again at 11 a.m. Okay, at 11 a.m.
Yeah.
I was watching this, but I thought, okay, maybe these both of these lows might get taken out and then it might fly up, and then it just started flying up. But did you see where the entry came from, though? Do you think anyone will have an idea where the
Yeah.
entry is coming from? No idea, right?
No.
No idea. But yeah, you know what it is. Okay, not just a random line, it is a price level. Okay, the 4 hour or rejection blocks price level. Okay, so that's that. Okay, I'll show you. I'll show you more. Yeah, let's look at couple more and get into ranges. Now we have the classic setup once again. What's the classic setup? This. Boom. This setup. I told you, right? A very consistent setup.
Yeah.
Let me show you. Has Asia created a strong high? No.
No.
See that? Not a strong high. Okay, so, and also above Asia, we have what? A strong high. Stop hunt, breakout structure. Can you see it? When a strong high is
Yeah.
created on lower time frame, we go into the higher time frames. So above the Asian high, what's our point of interest? 4 hour resistance. Can you see this? This is what's happening.
Yeah.
Strong high, Asian high below it. Okay, so for this setup, of course, I did not even go to the lower time frames. I just did this from the 4 hour itself, sold it. See, because why should I go to the lower time frames, right? The 4 hour is showing me everything. Stop loss above this high, 5 pips. Can you see that? 5 pips. We target the Asian low. Isn't that enough? On the 4 hour time frame. I'm on the 4 hour time frame. Okay, I did not even bother to go to the lower time frames like this. Okay, like this. So what happens? Let me see. Yeah, let me show you what happens. Look at that.
Yeah.
Okay, look at that. Let me go here. 50-minute time frame. This was a bit too early because I told you, like, it's not going to be perfect all the time. This was a little too early. See, 11:15, 50 minutes earlier. But what happened? There it comes. Can you see what happened? You understand the setup,
Yeah.
right? You understand the setup. Okay, so
Yeah.
same exact thing. Same exact thing. Okay, I'll show you another one. Look at this one. Yeah, this day, once again, this was completely based on timing because Asia looked like it created a strong high, stop hunt and a breakout structure. Okay.
Yeah.
So let's just mark out the timing 11:30, 12:30, because this time of the day, this is when we decide if we're going to sell it or buy it, right? That is when we decide if
Yeah.
we're going to sell it or buy it. Okay. So below Asia, we had a 1 hour rejection block. Can you see it? We had a 1 hour rejection block. We had a 4 hour rejection block in here. Okay. We had this. So let's see what happened. Now I did not take the sell. I only took the buy because for me, the buy looked like it made more sense like this. Bought it here. Because you see that, right? Asian low is not a strong low. Can you see that? Asian low is not a strong low. You can see that, right? Stop loss was below the rejection block. Okay, so let me show you what happened. Can you see what happened? At that time of the day,
Yeah.
tapped into the 4 hour rejection block. Okay, but I did not want to sell it. I did not want to sell because I did not like this price action because it's not even a clear breakout structure. Can you see that? Not even a clear breakout
No.
structure. Like,
No
yeah,
candle closing.
yeah. No, we do have a candle closing below these swing lows, but like this, it just doesn't make like not strong. Can you see it? Look at these bearish candles. They're losing momentum. Okay, they're losing momentum. So I did not
Yeah.
want to sell it anyway. I was looking at this. I was looking at the buy. Look at this. You could have even taken the sell because where did the sell come from? 4 hour rejection block. You saw that, right? At the right
Yeah.
time. Okay, but I did not take it. I was looking at the buy. Bought it here. What happens? Boom. Can you see that? A sell, a buy. You could have done some ping pong if you wanted to, but now I was good with a buy like this. More than enough, right? What more do we need? Can you understand setup? Okay, so let's see.
Yeah.
Hmm.
This is the whole new concept which I learned.
Yeah, you see this, right? Like I can't make these things up, right? It's the same thing that's happening. Okay, look at this one. Asia. Is the Asian high a strong high? No. Okay, not a strong high. Is the Asian low a strong low? No.
No.
Then next thing, mark out timing. Check for your higher time frame point of interest. So this should happen at 11:30 or 12:30. Let's go to the 4 hour, check our point of interest. Do we have anything on the 4 hour? No, the next one is over here, too far away, right? You can see it right away.
Yeah.
Okay, so that's like too far away. Let's go to the H1. On the H1, we have an imbalance though in here. Can you see that? Okay. I
Yeah.
did not use the imbalance. I think I refined it to some lower time frame. Let's see. Yeah, on the 30-minute, we have a rejection block. Can you see that? A slight refinement.
Yeah.
Okay. Then we expect price to get here. Stop loss can go where? Below the rejection block, around 4
Low.
pips. Yeah, I had like 4.8 pips with spreads. And where do we target? Asian high. Can you understand setup? Can you
Yeah.
understand the setup? Okay, so what happens? Look at this. Patiently wait. Okay, it's about patience. Comes down, patiently wait. Time is right. Okay, a little too late, but what happened? Ah, okay, 30 minutes later. Okay, but like I told you, like it's not gonna be perfect all the time. Okay, so don't expect perfectness all the time. But you see what happened, right? There it goes, and then
Yeah.
there it goes. Can you see that? Same exact thing. Asia and boom, this. You saw that, right? Okay, you saw that. So yeah, let's look at one more example and then get into the charts. Okay, let's get there. Okay. Look at this one. One obvious thing, Asian highs liquidity, right? Equal highs. Very obviously, you can see that
Yeah.
very clearly. Okay, Asian highs liquidity. Asian low is not strong as well, so we can expect that to get taken out too, right?
Yeah.
But there's an issue this day because there is nothing on the left we can refer to. See that? Nothing. Like, are you going to go to the monthly and then look for a point of interest that was created decades ago and then look for a trade? No. Okay, because you don't see there's even a dinosaur in here though. That's how old the price action is. Okay, so you don't have to do that. Okay, so what I did was once again, don't worry, don't worry. Okay, don't worry. I'll show you how I took the trade because Euro USD, not Euro USD, GBP USD was creating all time lows after that Queen's death or something. So something happened. So 11:30, 12:30. Okay. I mark out the timing. Now today, what am I gonna wait for? For a confirmation entry. Because I can't directly buy it, right?
Yeah.
Can't directly buy it, so I'm waiting now. Okay. Patience. Okay. Time is right. Let's see what price is gone. Because am I gonna sell it from inside of this? No, equal highs.
No.
Not gonna sell it here. Okay, only buys until the equal highs are taken out. So let's see. Okay, there it comes down. Manipulated the Asian low. But can I buy it here? No, right? Like, who knows if it
No.
wants to come somewhere on here? I do not know. So I'll
Yeah.
wait. Okay, I'll wait. Okay, there we get the break. Can you see that? Right at
Yeah.
London Open, it created a strong low. So we get the breakout structure right here. Okay, what do we do when a lower time frame strong low is created? We go into the higher time frames.
Higher time frame.
Go to the H1. On the H1, we have two POIs. What's that? Order block, breaker block in the same place, and a support.
Support.
Or else resistance broken turns into support and just the support. Okay, we have that. Let's go into the lower time frames. What do you do when you have two POIs? Are you going to buy it from both of them? No, I told you, right? Same exact thing again. Top one, wait for a reaction. Bottom one, you go for it. Okay, you go for it. So let's
Yeah.
wait now. Like, I'm setting my limit already here because that is where I buy it directly. Stop loss below the strong low. Targeting equal highs.
Asia
Makes
high.
sense, right? Yeah, equal highs. So we're targeting that like this. So let's wait. There it comes down. Can you see that? It came down, but do I have any reason to enter here? No, right?
No.
Because no reaction. So patiently wait. Now, can you see what they're doing though? Can you see what they're doing? They're making up this setup for us.
Yeah.
So,
Building liquidity.
yeah. Okay, so there we go. A swing low, feeding liquidity. Don't worry, okay, because we clearly have a breakout structure. See that? We clearly have a bullish breakout structure in here. We clearly have a bullish breakout structure. Not just a random breakout structure. It happened right at London Open after the manipulation of the Asian low. Because I told you at this time of the day is when the high or the low of the day is set, right? So we can say that this is already the low of the day, right? Because it is strong as well. So what happened? Look at this. There it comes. Yeah, you know what happens when this setup is present, right? So it comes. Okay, so it comes and then what happens? Not yet. Patiently wait, and there it goes. Can you see that? Right into the Asian highs. Okay, right into the Asian highs. This same exact setup. I showed this to you
Yeah.
so many times, right? Same exact setup. Sells for buys, I showed you the same exact setup again and again. Okay, so something like this. Can you understand this about the Asian setup? You saw what to do
Yeah.
when there is news. You saw what to do when there
Yeah.
is no news. You saw what to do when Asia is strong. You saw that, right?
Yeah.
Because those are the only three stuff that could happen, right? Those are the only three stuff that could happen. Okay, so now you know how to deal with all of those situations. Okay, so now let's talk about ranges. Okay, so now let's add ranges into the equation and then let's combine all of this, Asia and ranges. Okay, so let's see that.
Mm.
Now you understand this, right? I hope this one was
Yeah.
clear
Yeah.
about Asia. Okay, so yeah, that's about that. Like, see, even in here, it's the same thing that happened. What happened? Asia. Okay, Asia. What is this? False run. Oh, melted. Timing. Look at the timing. I told you, 11:30, 12:30. What do you think we had above Asia this day? 4 hour, if I remember. Yeah, rejection block right above the Asian high. Okay, so what happened? Another sell. See, can you see the consistency? Every day you have setups. Every single day. Look at this. Look at this. Asia, false run in the opposite direction. At this time of the day, what happened? Tapped right into the 4 hour rejection block. There comes the drop. Okay, so you understand that setup, right? I hope it
Yeah.
was clear. Okay, so on Euro USD, it works like magic for some reason. Okay, you have setups almost every single day. Okay, with this. Okay, so yeah, now let's talk about trading ranges. Okay, let's talk about trading ranges. Okay. So remember, a range always, yeah, now this is important. Okay, ranges are pretty important. Okay, ranges are very important. So yeah, let's talk about ranges. Remember, a range will always start from a strong high or as a strong low. You know that, right? It always starts from a
Yeah.
bullish QM or as a bearish QM. Okay, just do not call it QMs or whatever, just call it strong highs and lows. Okay, so let's see. Now let's say for this example's sake, something like this. Okay. Now what is this? This is a strong low, right? Why? Because liquidity was taken out and structure was broken. Minor structure broken, major structure is broken as well. Can you see it?
Yeah.
Major structure is broken as well. Then this turns into what? This will turn into a strong low, right?
Yeah.
And yeah, now for this example, let's say this is the low and then this is the high. Okay, I'll tell you how to confirm the high and the low both. But yeah, for now, let's say this is the high and the low. So if this is the high, low and the high of the range, what is the reason for a pullback? You know that, right? That is to take out the internal range liquidity, right? So
Yeah.
what is the internal range liquidity? It will be the swing lows that are resting inside of this range. Can you understand it? The swing lows
Yeah.
that are resting inside of this range. So let me just try it out something like this. But now there's a problem because not every time they clear out all the swing lows and then go up, right? Because sometimes it does this. Okay, fine. Sometimes it does this. Sometimes it does this, right? Sometimes it even does this. You have no idea what happened.
Yeah.
Okay, so because if it is that easy, if it is doing this all the time, then imagine how many millionaires we'll have by now, right? So it's not that
Yeah.
easy. Like, have you ever seen the market move in this way? No, it won't. Okay, it
No.
will not happen that way. Okay, so what we are gonna do is this. Remember this very well. Okay, within a lower time frame trade in range, always make sure to look for the higher time frame point of interest. Okay, for example, I'll show you examples. Don't worry. For example, now let's say this was a 4 hour range. Okay, let's say this was a 4 hour range. And then inside, like within a 4 hour range, let's say we had a daily order block or something in here. Could happen, right? Let's say maybe we had a daily
Yeah.
support or something in here. And then let's say the market started pulling back down, got into these areas, and this happened. What happened? A bullish breakout structure. Okay, a bullish breakout
Yeah.
structure. Now, how do we know what the major trend is doing? I told you in order to know what the major trend is doing, you have to always focus on the major breakout structure. Okay, because remember,
Yeah.
breakout is the direction. Okay, whichever way the market breaks out, that will be the direction. So then you will know if we are in a pullback or if we are in a range expansion. Okay, so for right now, what is the major breakout structure we have here? Bullish, right? It is bullish.
Yeah.
And now this was the counter trend, right? This thing right here was the counter trend. This came into
Yeah.
a higher time frame point of interest, and once again the counter trend turned bullish. Can you see that? So when the
Yeah.
counter trend and the major trend is doing the same thing, that is when we know that the range expansion has begun. Okay, when the counter trend and the major trend, when it is doing the same thing, We call it the range expansion. So when the range expansion starts, you're not going to go against the trend. Can you understand that?
Yeah.
You're not going to go against the trend anymore. Okay, so now you're not going to say, oh, there's still some internal range liquidity here. There's still some internal range liquidity here. So let me set it here. What if you try to set it there? Yeah, you're going to get stopped out because why? Range expansion has started. So they're going to move out of the external range liquidity. Can you
Yeah.
understand that? Okay, so this is why sometimes pullbacks come here, sometimes pullbacks come here, sometimes pullbacks come here. Because if it comes into a higher time frame zone, and if the counter trend breaks, there's nothing else you could do. You just have to follow the direction. Can you understand that? Okay, so always make sure to look for a higher time frame point of interest within a lower time frame trading range. I'll tell you which time frame to use for ranges and all of that. Okay, so was that clear? I hope it's clear. Okay, so yeah.
Yeah.
Now, how do we confirm ranges? So let's say the market started moving down and it turned bullish. Now, what do you know? Major trend bullish, counter trend bullish. What is it? The range expansion, right? The range expansion.
Yeah.
So then we know that our next target is here. But remember, as soon as it turns bullish, you can't confirm this as the low of the next trading range. That is wrong. Okay, because for you to confirm this as the low of the next trading range, it has to break out of the previous range first, like this. Can you understand that? Only once
Yeah.
you get a break out of this range, this will be the low of the next range. Okay, this will be the low of the next range. How do we know the low has created the high of the range? The counter trend has to turn bearish. Can you understand that? Now the major trend is
Yeah.
bullish, but the counter trend is bearish. Is it the range expansion? No, it is a retracement. That is when we know the retracement
It
has been
apply
done.
on all
Okay.
the time frames
Now it's
or is
like
it
this. Okay, yeah,
4 hour?
I'll tell you. Now it's like this. Now, these breaks and all of this depends on the time frame you're looking at. Now, remember, we're not going to mark out ranges on 15 minute, 30 minute, or 1 hour. We're going to mark out ranges on the daily and the 4 hour. Okay, because remember,
Okay.
ranges are only used to determine the direction. Remember that very well. Okay, ranges are
Yeah.
used to determine the direction only, not for entries. Okay, for entries is when we have Asia and London. Can you understand that? For entries, we use
Yeah.
Asia and London, but ranges will be used to identify the higher time frame direction, the major direction of the market. Okay, so now let's say this right here was a daily, like you're looking at a daily trading range. This break and this break must happen on the same time frame. Can you understand that? This break
Yeah.
and this break has to happen on the daily time frame itself. Okay, because you can't just see a lower time frame like a 4 hour breakout structure and then say the daily trading range is confirmed. That is wrong. Daily has to break structure. Only then you know that the daily trading range is formed. I'll show you examples. Can you understand that? Okay, only then you know
Yeah.
the range expansion has yeah, retracement or expansion has started. Now let's say it started coming down and it turned bullish. Now remember, what did I tell you? I told you this should happen on the same time frame, right? This should happen
Yeah.
on the same time. This counter trend break, this could happen on the same time frame or else one time frame lower. One time frame lower. Okay, so now I'm simplifying the time frames for you. Okay, so this could happen on the same time frame or else one time frame lower. So for example, if you are looking at a daily range, if you're looking at the daily time frame for ranges, this break must happen on the daily itself. But this could happen on the daily or else on the 4 hour. Can you understand it? Or else on the 4 hour.
Yeah.
Okay. So now in simple terms, now ICT tells this to you in one because ICT trades support and resistance. Okay, but he has named it, given it different names. Okay, so ICT
Yeah.
tells you like when the market is bullish, okay, when the market is bullish, expect support to hold and resistance to be broken. So what is the resistance? We expect these to break, but we
Lower high.
expect these to hold. Can you understand that? Okay. When the
Yeah.
market is like, I'll tell it to you this way. When the market is bullish, do not look for strong highs. Look for strong lows only. Can you understand that? Only look for
Yeah.
strong lows. Okay. When the market is bullish, do not look for strong highs. Look for strong lows. Okay. Because strong highs are not going to hold in a bullish market. It will go through it because resistance will be broken. Okay. So then now, this is when Asia comes into play. Okay, this is when Asia comes into play. After this breakout structure, what do you know? Daily bullish, counter trends bullish. It is the range expansion. So you know where the market is going to go next. Where? Into the external range liquidity. Can you understand that? So this is when
Yeah.
Asia comes into play. With every London Open, this is what we are expecting. Asia, London. Asia, London. Or as if Asia creates a strong low, what do you do? 4-hour time frame, London. This is when Asia comes into play. So intraday to swing, okay, we buy it here, close it out at the Asian high, leave the rest here. Buy it here, close it out at the Asian high, leave the rest here. Buy it here, close it out here. Can you understand that? Okay, so
Yeah.
Asia and ranges combined. I'll show you. Okay, so can you understand about the ranges? Do you have any question regarding this? No? I'll show you
No.
examples. Okay, so yeah, something like this is what happens. Okay, so and then I'll show you examples. Okay, I'll show you examples as well for everything I'm talking about right now. Okay. Same thing in a bearish market. Okay, same thing is what happens in a bearish market. What is the major breakout structure we have here? Bearish. Counter trend is also
Bearish.
bearish. So are you going to look for strong lows? No, you're going to look for strong highs. Okay, you're not going to mark
Yeah.
out POIs from here. You're going to mark out POIs from here because they are not going to hold. They are the ones that are going to hold. Can you understand? Because the market is bearish. So then how do we confirm a range? Let's say the market started coming down. And once you get a body closing below the previous range, then this turns into the high of the next range. Can you understand that? That turns into the high of
Yeah.
the next range. How do we know the high has created the low of the range? You have to get a bullish breakout on the same time frame. Once you get a bullish breakout on the same time frame, there we get the confirmation of the range. Okay? Then, yeah, let's say the market started moving up and it turned bearish. Now, what do you know? Major structure, bearish, counter trend bearish. Where's your next target? External range liquidity, right? That is when we know. Once
Yeah.
we get this break, this is when we know that the retracement is over. Okay. Now, are you going to say, oh, stop fund, breakout structure, let me buy it here? No, you're not going to do that anymore. Okay. So once again, this is when Asia comes into play. Now you know that the range expansion has begun. So with every London Open, you're expecting the market to drop maybe like this. Asia, sell. Asia, sell.
Sell.
Or maybe if Asia creates a strong high, I told you, a retracement into the 4-hour time frame, sell. If there is news, another sell. Maybe something like that. You're only selling it. When the range expansion begins, what you're doing is you're selling it. Okay, you will be selling it. Okay, so this is how we determine ranges. Can you understand that? Let me know. Right. So
Yeah.
now, have I answered your questions? The ones you wrote down, the ones you told me that you wrote down.
Yeah. Yeah.
Pretty much most
It
of
all
them, right?
cleared about the ranges.
Yeah, that's why I told you. Like along the way, we'll answer the questions. Okay, because I know the last time we did sessions, many of them had questions, many questions, because it wasn't complete. The ones that were leaked, it wasn't complete actually. Okay, like we had more sessions, so only half of them were leaked. So most of them watched half of the sessions, and then like, yeah, actually that was good publicity for me because everyone came back to me once again because it was
Yeah.
only half of it. Okay, so I can't help it. Okay, so okay. So now let me show you examples. Okay, let me show you examples. Like right now, why is the market moving up? Breakout structure bullish. Can you see that? This right
Yeah.
here, this drop right here was only a retracement into where? Into the strong low that was created on the 4-hour time frame. Look at this top hunt, breakout structure, strong low. How do we know the low has created the high of the range? Bearish breakout. Can you see that? After you
Yeah.
get this bearish breakout, you know that a range was created from here to here.
Yeah.
Then you know why it is coming down. Why? That is to take out the internal range liquidity, the swing lows. Okay. So within a lower time frame range, what do you look for? Higher time frame point of interest. So on this 4-hour strong low, what's the higher time frame point of interest you had? On the monthly, you had a rejection block.
Yeah.
See that? There we go. You had a rejection block on the monthly. So where did price come into? Came down, took out the internal range liquidity, tapped into the monthly rejection block. Now it is moving up. So now what are we going to do? We're going to buy it until this high gets taken out. Can you understand that? That is what I am
Yeah.
expecting currently. We're going to buy it until this high gets taken out. Okay, I'll buy it. I'll buy it. Okay. But then again, are you going to wait until they clear out the internal range liquidity and for all that shit to happen? Who knows how long it's going to take, right? No. Once you
Yeah.
identify this breakout structure, once you see this breakout structure, you know that, okay, the 4-hour has confirmed the sells, right, into these areas. Now, with every single London Open or is with Asia, what are you going to do? You're going to sell it. See that? You're going to sell it like that. Sell it, sell it, sell it. But once we get here, we're not going to look for sells anymore. Why? Internal taken out. We are on a strong low that was created on the 4-hour time frame. inside of a monthly point of interest, that is when we start looking for buys. Okay, so like that. Can you understand that? Okay, I'll show you more
Yeah.
ranges. Okay, I'll show you more ranges. Like you understand that, right? I hope it is clear. Okay, so look at this one. Even this one. See, stop hunt, breakout structure, strong low. How do we know the high was created? After this breakout structure. See that? Break,
Yeah.
low of the range, high of the range. Maybe this was the internal range liquidity that was taken out, and boom, goes into the external range liquidity. Yeah, same exact thing. Okay, so the only thing you have to do is understand the ranges. So let me show you a very clear example of a range. Yeah, let's go to the. Okay, let's talk about the previous, not the previous one, the one before the previous one, the range we had. Okay, look at this. First thing, what did I tell you to identify the major direction? What do? We focus on the major breakout structure, right? So what's the major breakout
Yeah.
structure we have here? Bearish.
Bearish.
And even in here, like then what should we mark out? A bullish range or is a bearish range? Obviously the bullish range, right? A bullish, I'm sorry, a
Yeah.
bearish range, right? Not a bullish range. Because why? The market is bearish. Why would you mark out a bullish range? Can you understand that? We mark out a bearish range. So I told you, where will a range start from? From a strong high or is a strong low. So where is the next daily strong high? In here. Why? Liquidity taken out from two equal highs and
Yeah.
structure broken. Can you see it? Strong high.
Yeah.
How do we know the high has created the low of the range? We have to get a bullish breakout on the same time frame. I told that to you, right? So
Yeah.
here we have it. See that? High of the range, low of the range. Okay. Now I'll tell you why I told you to wait for the bullish break on the same time frame itself. Okay, we had a nice example somewhere around here. Where was it? I think it was, yeah, must be somewhere around here. Yeah, I think it was here. Okay, let's see. Now look at this. Now, okay, let's say price was here. Now, can I mark this out as the low of the range? No, right? That is wrong. Because
No.
why? We did not get the bullish breakout yet. Let's go to the 4-hour time frame. I'm going to the 4-hour time frame. Okay, so let's see. Now, can you see that? Let me make the
We
line
have a
straight because,
break.
yeah, these lines are making me so uncomfortable. Give me a second. Okay, there you go. On the 4-hour time frame, we have a break.
Yeah.
But are you gonna trust that bullish break? No, because the daily is still bearish. Can you understand that? The daily is still bearish.
Yes.
But now what will everyone do? Everyone will tell you, oh, there we go. Stop hunt, breakout structure, strong low. Maybe this is some internal range liquidity. Let's buy it here. Okay, what happens? What happens if you want to buy it here? Not even a reaction. Not even a reaction from that support. Because why? Now, when everyone else is trying to look at it in a bearish way, now how are we going to look at? Now, how are we going to look at it? I'll show you. Now, when everyone else is trying to look for a bullish range, since we know that still the daily is bearish, we're going to look at a bearish range itself. Now, what is the major breakout structure we have here? Bearish, right?
Bearish.
Major breakout structure bearish. Counter trend is also bearish. Can you see that break?
Yeah.
So then I told you when the market is bearish, are we going to look for strong lows? No, we're going to look for strong
No.
highs because the strong low is not going to hold. The strong high is the one that is going to hold. Can you understand that? So your next
Yeah.
zone of interest is not here. Your next zone of interest is up here, order block and the rejection block. Can you understand that? So what happens? There it goes inside of it. This is when you are interested in taking sells. So I was waiting for this rejection block to pay out, honestly, because I missed it. See that? Came very closer to it. And where is your
Yeah.
final target? All the way down here, right? What happened?
External range.
See that? Now, did you see what happened? That's why I told you, wait for those breaks on the same time frame. Okay, but look at this one. Once the daily turned bullish in here, there we get the confirmation that the daily wants to go higher. Can you understand that? Then we
Yeah.
get the confirmation that the daily wants to go higher. Now we can mark out 4-hour bullish ranges because why? Daily has already confirmed the bullishness, right? Daily has also confirmed the bullishness. So how can we buy this thing now? Once again, just that simple logic I told you about. High highs, high lows, high highs. What will everyone expect? High low, high high. What
Yeah.
are we expecting? A manipulation of this low, right? Now, just because right below this, we have an imbalance. Are we going to use that without checking the higher time frames? No. Let's go to the daily. What do we have on the daily? Right below this, we have the order block. As a resistance broken, it turns into support. See that? We have that.
Yeah.
Okay, so we have some liquidity right here. So what happens? Look at this. Okay, wait. There it goes. Can you see the reaction? Where
Yeah.
is it coming from? Do you think anyone will have an idea where it's coming from? No idea,
No.
right? Look at that. Taps, and there it goes. Flies. Can you understand that? Okay, so that's why I told you to wait for those breaks on the same time frame. Now you get it, right? Now you get it. Now,
Yeah.
the reason why I told you that, now you see the reason why. Okay, so now I'll show you more trades. Okay, now look at this. What did I tell you? Within a lower time frame range, what should we look for? A higher time frame point of interest, right? Now, daily range,
Yeah.
let's go to the weekly. What do we have on the weekly on the daily strong high? A resistance, right? Can you see that? A resistance or
Yeah.
else a rejection block. Okay, so we have the rejection block. So now what can we do? Now, since this is a daily range, what time frame can we use for breaks? I told you we can use one time frame lower, right? I told that to you. So now we can use a
Yeah.
4-hour time frame. Now, can you see what the 4-hour did? The 4-hour got into this point of interest. Okay, the 4-hour did get into this zone of interest. Now, in here, are you gonna take this as a breakout structure? No, that's wrong.
No.
Okay, so wait. So now what happened? The 4-hour has tapped into the weekly point of interest, and the 4-hour did a stop hunt and gave us what? A major breakout structure. After tapping into a weekly zone, now what do you know? Daily is bearish, which means the major breakout structure is bearish. The counter trend has also turned bearish. Can you see that?
Bearish.
So what is it? The range expansion. It is the range expansion, right? Are you gonna buy it anymore? No.
No.
With every single time it goes up, you're looking for sales. Okay, you are looking for sales. That is what you could do. Okay, so in here, of course, like after this bearish breakout structure, I was still looking for sales, but yeah, we did get some buy moves in here. Okay, we did get some buy moves in here, but now I did get stopped out in here, okay, with this news candle, because I'll show you. I thought that, because the thing is, in hindsight, I can explain everything to you, right? Because it has already gone. It's already played out. Okay, but when you're looking at it in real time, nobody knows what's gonna happen exactly, right? So this is
Yeah.
what I thought. I thought, okay, maybe this is the strong high. See there? Liquidity taken, structure broken. Okay, I thought this was the strong high. This was the internal range liquidity, and no higher time frame price. I think it was a H1. Yeah, on the H1 we had a resistance. See that? So even for the losing
Yeah.
trades, can you see I'm taking the same, I'm trading the same exact setup. Okay, nothing else,
Yeah.
nothing else. Okay, so I tried to sell it here, and you can see this candle, right? Trade through it. News. Okay, so stopped out. Stopped out. Then I quickly realized, okay, after this bullish breakout structure, we have a range on the 4-hour that is from up here to down here. So actually, what did they do? Do not let these bullish breaks fool you, because we have already gotten this bearish break on the daily and a major break on the 4-hour. So this move to the upside was what? It was only to take out the internal range liquidity of this range from here to here. Can you understand that? Don't
Yeah.
let the bullish breaks fool you, like I told you. Okay. And on this 4-hour strong high, what do you look for? A daily zone of interest, right? Why? Because if it's a lower time frame strong high, we look for the higher time frame point of interest. Let's go to the daily. What do we have? Another resistance, right? Another resistance, or is another rejection block. Can you see that? Another one.
Yeah.
Okay, so yeah, once again, I took another loss in here. Okay, because I'll have to be transparent, like I told you. I took another loss in here because I sold it from this daily zone right away with a 5 pip stop loss. Boom. Okay, so stopped out. That happens. That happens. Can't help it. Okay, so then I thought, okay, took a loss in here, another loss in here. No more trading that day. Okay, I'll wait. I'll wait for confirmations. Let's see, because I can be wrong too, right? I can be wrong too. So
Yeah.
I'll have to accept that and then wait. Okay, so yeah, 2 straight losses, had to stay out. Okay, so now I'm waiting for a confirmation. What's the confirmation we want to see? Inside of the zone of interest, we want to see a breakout structure, right? On a lower time frame.
Yeah.
Okay, on a lower time frame. So let's go to the 1 hour. On the 1 hour, of course, there are no swing points to be seen for us to get the confirmation entry. Can you see that? No swing points
Yeah.
on the 1 hour time frame. So then let's go to 30 minutes. Let's check one time frame lower. I think it was on the 30 minute if I remember. Yeah, on the 30 minute. What do we have? What do we have on the 30 minute? We have a swing low. So now, if this breaks, we get the confirmation of the daily range. If not, it'll just keep on going higher maybe. Okay, so let's wait. Yeah, I sold it here and another loss. Okay, let's see. There we get the break. Can you see that? Break.
Yeah.
So now what has the 30 minute done? It has created a strong high inside of a daily zone of interest. Top one breakout structure strong high. Can you see it? Once again, what did I tell you? When a lower time frame strong high is created, where will your focus go into? Higher time frames, right?
Higher time
Let's
frame.
go to the H1. Oh, but the H1 has too many POIs. We have an imbalance. We have an order block. We have a resistance or as a rejection block. 3. What are you going to do? Go to another higher time frame. The guesswork is over then. Okay, what do we have? Rejection block. You see the importance of the higher time frames, right? We had a
Yeah.
resistance, okay? And what made that resistance a high quality zone is the Asian highest liquidity. I told you, this is when Asia comes into play. I told you, right? What are you going to do?
Yeah.
Now, you know that daily is what? Bearish. 4 hour is what? Bearish.
Bearish.
30 minute is what? Bearish. So do you have any
Bearish.
reason to buy this now? No.
No.
Obviously not, right? So let's look for sell. So this day, for some reason, London did not play the setup. Okay, London did not play the setup. But even though London did not play the setup, I took it with New York session. See, 11:30, 12:30. I was expecting London to play the setup, but this happened. Failed. See that? Failed to tap into it. So had to patiently wait. Had to patiently wait. Then it started going up once again. And what it did was it created equal highs below our point of interest. Can you see it? Equal highs
Yeah.
right below the daily, like 4 hour zone of interest. Then took a sell in here. Where is my first target? Asian low.
Asia low.
But yeah, now this is the thing. Now you saw how quick the moves were when the time was right? You saw that. You
Yeah.
saw how quick the moves were. Now look how slow this setup was because why? Time isn't right. Look at the time. It's like 7 p.m. my time, our time. So not right. Time is not good. Yeah, see that? 7 p.m. So look how slow the setup is. Yeah. Took a while, but yeah, eventually it comes into the targets. Can you understand that setup? You understand the setup, right? Hope it's clear. Okay.
Yeah.
Then what do? Pay yourself down at the Asia. Make sure you always pay yourself. Okay, because we're intraday traders, right? We must pay ourselves.
Yeah.
Okay, so there we go. Pay ourselves and then leave the rest into the 4 hour external range liquidity. Can you understand that? Into the 4 hour
Yeah.
external range liquidity because 4 hour internal range liquidity is now taken out in here. So now they will come back down for the 4 hour external range liquidity, right? It come back down for the 4
Yeah.
hour external range liquidity. Okay. Leave it out like that. And then once again, you can see that we have a major breakout structure that is bearish in here. Can you see that? Okay. So then again, above Asia, what did we have? Let's check. Let's go to the 4 hour time frame. Above Asia, we had a rejection block in here. Can you see that? See that? Right above Asia, we had a
Yeah.
rejection block in here. But if you go to the daily resistance is here. Can you see that? We had a daily
Yeah.
resistance in here. So what would you choose? Daily or the 4 hour?
Daily.
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 Okay, yeah, we're going to choose the daily. Okay. And then, yeah, I did a slight refinement of this into some imbalance. Ah, yeah, there we go. Doing a slight refinement of this daily zone into the 1 hour imbalance. Can you see it? A slight refinement
Yeah.
of it into the 1 hour imbalance. And what makes that level the high quality level is what? Asian highest liquidity. See, now we have the classic setup in play. Asia, okay, ranges are clear. Timing, 11:30, 12:30. Can you see, like, we're doing the same thing again and again, okay?
Yeah.
Sell it like this. Okay, we're going to sell it like this. And then where will we place our stop loss? Around 5 pips. Where is our first target? Asian low. Now look at the difference between these two setups. You saw how long this took for this setup to come from here down into the Asian lows. It took almost 12 hours. Because why? Timing wasn't good, right? But look at this one.
Yeah.
When time is right, 11:30. Right at 11:30. Can you see that? right at 11:30, a manipulation of Asia, then what happens? Done. See, when the time is right, that is how quick the setups are. That is how quick the setups are. You're done. Okay, so then what do? Pay yourself down at the Asian low, leave the rest into the external range liquidity.
Forever.
Can you understand that? I told you. I told you
Yeah.
what to do with every Asian. Okay, so Asia, sell. Like, see, this is the same exact thing. Asia, sell. Asia, sell. Okay, we're going to continue. We're going to continue with this. Okay, so let's wait now. Melting, melting. Now, another thing. Now, do you stress about marking out order blocks or anything in here? No, we don't care about
No.
this side anymore. We only care about this side. Now you see that, right? Now you see this. Okay,
Yeah.
we don't stress about this side. Why should we, right? The market is bearish. Why should we look for buys? But most people will tell you, oh, look at that. That's a strong one. Because why? Look at the move after it. That's a strong order block, right? With a huge imbalance. Who cares, right? They're not. This is not going to hold anyway because the market is bearish. Okay, so let's wait. Now you see that, right? So those are wrong, actually, very wrong. Okay, because you can't do
Yeah.
that way. Okay, so let's wait now. Once again, it runs into Asia. Oh, I think we had no setup this day because Asia created a strong high. Can you see that? Stop hunt, breakout structure. So
Yeah.
where will our focus go into? 4 hour. What do we have on the 4 hour? I told you, order block or as a rejection block. I told you, right? It happens all the time. Order block or as a
Yeah.
rejection block will be created. Sometimes only a rejection block, but sometimes both of them. But yeah, you know what to do when there are both of them. So there we go. Now, same exact thing. At what time of the day are we expecting price to get here? 11:30 or else 12:30.
230.
Okay, so 11:30 or 12:30. No, it did not get here. But just because London opened here, am I gonna buy it? No. I told you,
No.
right? This setup right here is a good setup to go with only when the market is what? Bullish, not bearish. Now, all the time
Yeah.
frames are bearish. Am I just gonna randomly buy it with London? No, that's suicide because London will somehow continue down. See that? You see what
Yeah.
happened? Okay, so you understand that, right? So you have to be flexible. Just because I told you if it runs below Asia, you have to buy it, you're not going to do that when the market is bearish. Okay, so understand that. Okay, so no trades this day. Let's wait. Because if the setup isn't clear, there's no point of forcing it, right? No point of doing that.
Yeah.
Okay, so just wait. Just wait. Okay. Once again, it runs into Asia. Okay, so let's see how we could have taken a trade this day. Okay, what has Asia done? Asia has created a strong high.
Strong high.
Liquidity taken. That same exact setup. Breakout structure. Now you know where everyone else will sell it from, right? When it goes up. The order block that broke structure.
Yeah.
The supply that broke structure. The trend lines from here. Are we going to do this? No.
No.
We know what is this? This is internal range liquidity. And above it, what do we have? A resistance. See that? A resistance.
Yeah.
Okay, then what we could do is sell it. Okay, we can sell it. Stop loss where? Above the strong high. 4 pips. Where do we target? For our external range liquid because oh, this was a very unfortunate trade. I remember. Let me show you. we target the 4 hour external range liquidity, right? Because we're very close to it. I think this was a break even. Let's see. Yeah, look at the reaction. Tapped right into the point of interest. Dropped. Can you see that? Dropped.
Yeah.
Okay, but I moved it to break even, and then yeah, this happened. This happened. Okay, so break even. Didn't even pay myself. Okay, so break even. So yeah, say fuck it and then let it go. Okay, can't help it. Can't help it. Okay, but remember, don't let these little 30-minute breaks fool you. Okay, do not let them fool you because like 30-minute or these lower time frames are not the ones that are used for direction, right? What are the time frames we use
Yeah.
for direction? Daily, weekly, and monthly mainly. But right now we use the daily and a 4 hour, right? The daily is bearish,
Yeah.
4 hour bearish, 30-minute bearish. So do not let the bullish moves fool you. They're only going up to collect some buy stops or something, right? To fuel the move once again to the downside. So before that, they have to take some buy stops, right? They have to take some buy stops. So let's see where they're going to stop at. Where are they going to stop this at a strong high, right? They'll stop this at a
Yeah.
strong high. So once again, on the 1 hour time frame, what do we have here? A strong high. Stop hunt, breakout structure,
Breakup structure.
high of the range. How do we know the high has created the low of the range? Bullish breakout structure. See that? Then high of the
Yeah.
range, low of the range. Why are they moving up? That is to take out the internal
Internal
range
range.
liquidity. What's the internal range liquidity? Swing highs, swing highs. Can you understand that? Okay.
Yeah.
So within a lower time frame range, what do we look for? A higher time frame point of interest. Okay. So let's go to the daily. What did we have? We had a rejection block in here, daily rejection block in here. But the thing is, like 4 pips away from the daily rejection block, we had a 4 hour rejection block as well. Can you see that?
Yeah.
So now they're very close to each other, right? So what can you do? Wait for a reaction from the bottom one, snipe it from the top one. Can you understand that? Snipe it from the top
Yeah.
one. Okay. So now let's wait. Let's wait once again. We know that now they're moving up to take out this internal range liquidity or something. So let's patiently wait for this day. Okay. There we go. Asia. Is the Asian low a strong low? No, right? No. Is the Asian high a strong high? Obviously not.
No.
Liquidity. Then what's the next thing we focus on? Timing. 11:30 or 12:30, right? That's the time when we are interested in taking trades. And then, like I told you, from here, we wait for reaction. From here, what do? We sell it. Can you understand that? Same exact thing, okay? We
Yeah.
sell it. But for this setup, yes, I think it was for this. This setup, I did not risk like I normally do. Why? Because this high looks like equal highs. Was a bit skeptical. Can you understand that? But had to take the risk
Yeah.
because there was a daily point of interest in here. But I saw this and was a bit skeptical because almost equal highs. Okay, so yeah, stop loss goes above these rejection blocks. Okay, so not 3 pips once again because with spreads you will have to always factor it. Okay, like this. And where do we target? We target the Asian low. Can you understand setup? Same exact setup. It's the same exact setup. Okay,
Yeah.
so what happened? Wait, wait. 11:30. Look at that. Right at 11:30 on the dot. Look at that. A manipulation of Asia into the daily zone of interest. So no trades from here because it did not give us any reaction from here. But from here, there we get the trade. Then what happens? Look how quick the move is when the time is right. Done. For 54 pips, how long did it take you? It's 1 hour, right? Yeah, just 1 hour. Then what do? Pay yourself, leave the rest. See that? Okay, so I did take the sell from the top. Okay, so because I told you I'm not good with confirmation entries. Okay, so like another student of mine, since like I told them what to do when there are 2 POIs, he waited for a confirmation entry. So I'll show you the confirmation entry as well. I did not take the confirmation entry. Okay, like I'm showing you the setup that he sent me. What is this? A stop fund and a breakout structure. So this turns into what? A strong high.
Yeah.
How do we know the high has created the low of the range? We have to get a bullish breakout on the same time frame, right? So on the 50-minute, let's wait
Yeah.
for a bullish breakout. Not yet. Not yet. There we get it. Can you see that? Bullish breakout.
Yeah.
What's our range from up here to down here? Why are they moving up? That is to take out the internal range liquidity.
Internal range.
So above the internal range liquidity on a lower time frame, strong low, what do we look for? Higher time frame point of interest, right? Let's go to the H1. What do we have on the H1? We have an order block and as well as a rejection block or as a resistance. Can you see it? Now
Yeah.
this is what he's done. Okay, this is what he's done. We had 2 POIs once again. Okay, we had 2 POIs. And that is right above the internal range liquidity. Can you see that? That is right above the
Yeah.
internal range liquidity. Then this is what you could do. This is what he has done was actually sell it. Okay, selling it here. Stop loss 5 pips above both the POIs. Can you understand that? 5 pips above both the
Yeah.
POIs. First target here. Okay, so what happens? There it goes. Can you understand that? This range right here, this little 50-minute range. Then what happens? There it comes. The confirmation entry. Can you see that? But I'm not that good with confirmation entries. I love this direct trade, so I got this or not this. So you saw this, right? Another direct one.
Yeah.
Okay, a confirmation entry. So you had another entry there. Okay, so that's that. And then what do? You pay yourself, leave the rest here, like I told you. Now let's wait. Now once again, it's about waiting. Let's wait for the next day's Asian session. Okay, let's wait for Asia. What has Asia done? Asia has created a strong high.
Strong high.
Liquidity taken, structure broken. Where do we look into? I told you, 4 hour time frame. What do we have on the 4 hour time frame? It always happens. Order blocks. rejection blocks. Okay, and then
Yeah.
yeah, we expect price to get here and then a sell off, right? That is what we expect.
Yeah.
Okay, yeah, we expect price to get here and then give us a sell off. So once again, in here, this is what I did. Sold it here. I remember this was a bit too early, this entry. 5 pip stop loss above both the POIs. Can you understand that? Above both the POIs. So even if it taps
Yeah.
into the top one, I'm still safe, right? I'm still safe. And where do I target? Since we're very close to the external range liquidity, we target that. Oh, this was a break even too. Let me show you. Look at this. Look at that. Taps. Done. Did you see the setup? Done. Okay,
Yeah.
but like trust me, I only took off 20% of the total volume that I used. 20% of the total volume that I used, and then this happened. Break even. Can't help it. That's why you should always pay yourself. Okay, but that's fine. That's fine. It'll always go up because it took out the 4-hour external range liquidity, so they have to go back up. But then after it breaks out of the 4-hour range, where is your next target? The daily range that is all the way down here. Can you understand that?
Yeah.
The daily range that is. Now remember, this is not 95% of my account. Okay, this is not 91%. This is not 97%. No, because am I leaving full volume? No. Okay, so no. Anyway, I'm not gonna do that. Okay, so because who knows, right? Who knows if it's gonna really come here or not? For sure, we don't know. Okay, the only thing we know is
Yeah.
our technical analysis. It says that the price is gonna get here. Okay, so look at the move then. Okay, so what happens? Right into the melting into the external range liquidity. That is how we could have played with the daily range. I told you, right? After this break, right? I told you, after this break right here, what
Yeah.
is it? What is it? Asia sell, Asia sell, Asia sell. Asia creates a strong high, you sell. I told you this is the one that's going to happen, right? So, isn't that what happened?
Yeah.
Can you understand that? Okay, so yeah, that is how we could have played with the range. So, was that clear about that range? I'll show you more, but yeah, for now, was that clear?
Yeah.
Yeah. Okay. And you see this, right? We're not going to mark out ranges on the 15-minute and then play with that. No, ranges are used for direction. Okay. Ranges are used for direction, not for entries. Okay. Sometimes for
Yeah.
confirmation entries, but mainly ranges are used for direction. So ranges must be marked out on a daily or else a 4-hour. Okay. Daily, or if the daily isn't clear, it can be on a 4-hour. Okay. But remember, always base your trades on the higher time frames. Okay. Higher time frames. So yeah, let's look at another one. Yeah, I'll show you another range. Then let's do a top-down analysis. Okay, first thing, to identify the major direction, what do we look for? Yeah, after this, okay, now we're talking, I showed you what happened here. Now let's look at another range. So after we identified, to identify the major direction, what do we look for? Major breakout structure, right? So what's the major breakout structure? This.
This.
So this can be the high of the next range, right?
Yeah.
But can you ignore the fact that this is a strong high as well? This is a
Yeah.
strong high as well. See that? Stop fund, breakout structure. So is the range from here or is from here? This is a strong high, right? Price can react to this too. So this will be the high of the range, not here. Okay. High of the range. I told you it always starts from a strong high. So how do we know the
Yeah.
high has created the low of the range? How do we know that? We have to get a bullish breakout
Bullish
on the
breakout
same
structure.
time frame. Yeah. So here we got the bullish breakout. See that? Lower lows, lower highs, lower lows, break. Now we have a range from up here to down here. So if this is the range, why is it moving up? That is to take out the internal range liquidity. Can you understand that? Okay. Now
Yeah.
let's go to the 4-hour. Yeah. Now this is why ICT tells you not to marry the idea. Okay, because once you just stick to an idea and not be flexible, this is what happens. Okay, I'll show you what happens. I got a very nice entry, but I had something else in my mind, so I closed out everything. Okay, so now this day we had news. Okay, we had news coming. So what is it? Let's see. Let's check. This was Tuesday, 13th of September. Let's check. 13th of September. September 13th. What do we have? CPI, 6 p.m. Is it safe for us to trade London? No, right?
No.
Not safe for us to trade London. Let's trade New York then. Okay, so New York opens at 4:30. That's the kill zone. Session is at 5:30. That's the New York session. Okay. At this time of the day is when we are trading. So now we know obviously London is not going to do the major move. And can you see what Asia is doing? Building up liquidity for news. See that? Patiently wait.
Yeah.
Okay, patiently wait. But just because London went above Asia, can we expect this to happen? No, news.
No.
Okay, yeah. So patiently wait. Now what happened was, now this is what I had in my mind. You saw this, right? You saw what I marked this one out as the daily internal range liquidity. You remember
Yeah.
that, right? Yeah. Now, above this London high that was created in here on the 4-hour time frame, okay, on the 4-hour time frame, above this London high, what did we have? We had a resistance. Can you see that? We had a resistance.
Yeah.
Like we have this formation once again. Can you see that? Strong high. Okay. London high's liquidity right below it. So we can expect price to tap here and then fall. So this was my thought process once again. I thought, okay, maybe it might tap into the 4-hour, fall back down, take out the Asian low, and then go back up for the daily internal range liquidity. That is what I had in my mind. Okay, so this is what I did. Now they're building up liquidity, London highs liquidity, because you saw this, right? There's news, so we can't trade it. So what I did was sold it here, okay, from the 4-hour order block, targeting the Asian low with a 5 pip stop loss. Okay, this is what I did. This was where I set my TP at, because I was very sure that this was going to get taken out, the daily internal range liquidity. Okay, my only target for news was this. Okay, so look what happened though. Okay, there we go. Time is perfect. Can you see what happened at that time of the day?
Yes.
Right at New York Open. See that? This is how you could play with time and price. Right at New York Open. Now look at this. Okay, so my TP was set here. My TP was set here, and then look at that. News. So my TP was set here. Instantly regretted it because I closed everything at 58 pips. Look at the move. A total of what? A total of 184 pips. I missed more than half of the move. Okay, closed out everything here because why? I didn't know the direction. So without knowing the direction, I can't leave runners, right? I can't. Okay,
Yeah.
so I closed out everything. And then now we have to be flexible. Okay, now this is when we have to be flexible because look at this. The major range we had was bearish. Counter trend also turned bearish. Can you see that?
Yeah.
Now, what is it? The range expansion, right? Now, are you going to say, oh, there's still some daily internal range liquidity here. Let me buy it until that gets taken out. No, you're only going to sell it. Okay, you are only going to sell it. Then, yeah, you can just backtest this price action and see. From here, we got a little pullback. From where? Once again, look at this setup. What is this? Strong low, Asian lows liquidity, like this, and the support.
Yeah.
Okay, so what happened? Look at this. Can you see the buy? A buy. Okay, a buy, and then it's gonna fall off from this daily order block right here that was created on us. I told you, right? When a lower time frame strong high is created, we go into the higher time frames to check our point of interest. I told that to you, right? Now, if you go to the daily,
Yeah.
we had an order block in here. Okay, we had an order block in here on the 4-hour strong high. So yeah, they tapped right into it, and then it started falling once again. So you can see you can sell here. Once again, this day we had Asia creating another rejection block. You can sell it here, all targeting where? The external range liquidity of the daily time frame. So what happened? Can you see what happened? That is how you could have
Yeah.
played with the range. Okay, that's how you could have played with the range. So was that clear? Was that clear about that range? Hope that was clear.
Yeah.
Okay, so you have to be flexible. Okay, you have to be flexible. And once again, if you do not know the targets, don't leave runners. There's no point of doing that. Okay, so but in here, of course, I regret it because you saw the move, right? Because I had my entry
Yeah.
from here. I could have held it all the way down
Big
here.
move.
A 300 pip move. I closed it out at 50 pips right here. Okay, so shit happens, man. Can't help it. Okay, so that's that. Okay, so are you clear about the ranges? Okay, I hope you're clear
Yeah.
about the ranges. Okay, now I'll tell you what to do on the higher time frames. Okay, so now it's like this. Okay, so every single new month, okay, every single new month, I'll show you examples on gold. Every single new month, you have to look into the monthly time frame. Okay, every single new week
Okay.
you have to look. Yeah, like you can watch the session later and then take down some notes. Okay, so right now I'll tell you remember every single new month you have to look into the monthly time frame. I'll tell you why. Okay, because you don't have to look at the monthly every single day, right? Because it takes 30 days to make one of these. So what's the point of looking at it every single day? There's no point. Okay, so the monthly is like a 1 day time frame. You only have to look at it once a month. Okay, so on the monthly, this is what you're going to do. You're not going to mark out ranges or do any of that. Okay, on the monthly, what we're going to do is we're going to mark out the next point of interest. Okay, let me show you what I mean. So what do I mean by the next point of interest? Where will the next monthly candle open? In here, right? This where
Yeah.
when it opens here, what's the next point of interest? Order block. Can you understand that? Or else a rejection block. Remember, monthly closing prices are strong as fuck. That's what I can tell you. They're very strong. Okay, they are very strong. These could be used again and again for intraday plays. Okay, just backtest that and see, then you will understand. Okay, so these levels are very strong, very strong. So make sure to always pay attention to these monthly levels. Okay, so now like I'm not going to jump from monthly to the 4 hour directly. Okay, I'm only showing you what we do on the monthly time frame. Okay, so now let's see what price is going to do. Okay. Now, what did I tell you? What is this? This is a strong high, right? This is a strong high. Why? Liquidity
Yeah.
taken, structure broken.
Mm.
So within the lower time frame strong high, what did I tell you? We have to look for the higher time frame point of interest, right? So within this 4 hour strong high, what's the point of interest you have here? A monthly order block.
Monthly order.
Okay, a monthly order block. How do we know the high has created the low of the range? We have to get a bullish breakout. So here we get the breakout on the same time frame. We have a range now from here to here. Okay, so now let's wait. Now, once again, if you backtest this price action, you will see that they created an Asian high right below the monthly point of interest. What are they doing? Feeding liquidity, right? Feeding liquidity
Yeah.
into the monthly zone. So yeah, what we're gonna do is sell it here. Okay, we're gonna sell it here like this. And then now it's gold. Okay, I can't have 2 to 5 pip stop losses on gold. You'll have to have at least
Yeah.
like 15 to 20 stop losses minimum. Okay, so for me, maximum will be 20 pips. And then where do we target? Since it's a monthly zone, it's coming from a monthly zone, we target the external range itself because the push is going to last long, right? It's coming from a monthly zone. Now, once again, do you think anyone will have an idea what this is? No. Then they'll tell
No.
you he used the 50% of the imbalance. I'm sorry, 50% of this week. Are we
Yeah.
using that though? No, right? It's a monthly level. Okay, a very strong level. So look at the reaction. Look at that. Tapped and melted. Can you see that? Where did it come from?
Yeah.
Where did it come from? A monthly level. Okay, so the reason I told you to look for the monthly is that because look at this. Where did the high of that month get created? Right at the order block. Can you see that? Right at the order block.
Yeah.
Okay, so it's a monthly candle, right? For 30 days, you will be in profits. That's the thing. It's a swing. Okay, so look at this. 1,200, yeah, 1,200 pips. Okay, so just think of it. Even if you use the 0.01, you'll have $120 from that trade. Okay, so what more do we need, right? So that's that. Now, same thing. You have to do that every single new month. Okay, remember, you have to do it every new month. Now, the next month, where will the next monthly candle open? In here, right? What's your next point of
Yeah.
interest? Now you have an imbalance. Can you see that?
Yeah.
Now, like, can I just refine this imbalance into this rejection block? No, right? That is this monthly time frame. So this is too far away. Look at that. 240 pips away. Can I do 240 pip refinements? No, no way.
No.
Okay, maybe into lower time frames you can, but yeah, like I did refine it into some, I think into this rejection block in here. See that? Not huge refinement, just a little slight refinement into that rejection block that was in here. So yeah, look at, but couldn't hold it though because look at this. Look at the reaction. Look at the reaction. Took a nice sell.
Yeah.
Okay, moved it to break even after this breakout structure. It didn't even take profits because I know that price is gonna get here. Then this happened the next day. Stopped me out at break even and fell from the same point. See that? But the point is, where did the high of that month get created? Right at the imbalance. Can you see that? Okay, so
Yeah.
you're swinging, you're doing intraday trades, you're doing all of it. Okay, so that's why I'm teaching you this. Okay, so you can do anything with this. So look at this. This is like one of the cleanest entries I had. Where will the next monthly candle open? In here, right? What is your next point of interest? Rejection block now. open close levels. Can you see that?
Yeah.
My entry was even better because I refined this monthly level into a 4-hour order block. Can you see this? Monthly level refined to a 4-hour SBR or an order block. See that?
Yeah.
Right here. Okay. So like that. And like, because why are we doing that? Because on a daily, I told you on the daily, we can mark out we can mark out ranges, right? We can mark out ranges. So look at this. What is the major breakout structure we have? Bearish. So what is the high of the range we have from here? Why? Stop fund. Breakout structure.
Breakup structure.
How do we know the high has created the low of the range? Breakout structure on the same time frame, low of the range. So within a lower time frame trading range, what did I tell you? We have to look for the higher time frame point of interest. So your daily POI, I'm sorry, daily range is from here to here. We had a monthly POI in here. Can you understand that? Okay, so look
Yeah.
where the current sell is coming from. Okay, the major sell, look where it's coming from. Look at the entry, okay? Look at that. Can you see it? Taps and
Sniper
melted.
entry.
Okay, yeah. Now I told you, since this is a daily range, for you to see the counter trend breaking, what can you do? You can look for one time frame lower, right? Now look at this. The 4-hour tapped into a monthly zone, instantly broke structure.
Yeah.
So what are you going to do? From this breakout structure onwards, are you going to look for buys? No more buys.
No.
Sell. Because range expansion, right? So if you take a sell here, where is your final target? External range liquidity. Can you understand that? Okay, so how
Yeah.
many pips is that? Look at this. 1260 pips. Is that enough? Okay, so more than enough, right? That is more than enough. Once again, like I told you, if you use the 0.01, you have $120. Okay, so
All for the month.
yeah, like anyway, you're not gonna use a 0.01, right? You're gonna use a high left side. So yeah, this is possible. Like you see this, right? I'm showing you the same thing again and again. Okay, so I can't make these things up, right? So just back test and study. Okay, so last week I had a nice entry on gold. I was so lucky to close it out properly. Look at this range. Strong high. Can you see that? Stop hunt, breakout structure, high of the range, low of the range, bullish breakout. Okay. Why are they going up? To take out the internal range liquidity. Above the internal range liquidity, what did we have? Resistance. Look at the entry. Take a sell here. Where do you target? External range liquidity. That is here. Can you see what happened? Right into
Yeah.
the targets. Right into the targets. Okay, so that is how we can play with the ranges and all that stuff. Now, for some reason, it is going up. Okay, so it is going up like this from here. So I'm expecting price to get into these areas, at least into a weekly resistance once again. Can you see that? Yeah, let's wait and see.
Yeah.
Let's wait and see until price gets here. Let's wait for the reaction. Okay, so that's that. Okay, so can you understand this stuff so far? We
Yeah.
did not do the top-down analysis yet. Okay, so yeah, now I'll tell you how to do the top-down analysis. Okay, because I showed you all the stuff that needs to be seen. Now let's look for the top-down analysis and end this. Okay, so your questions are cleared, right? Most of them. All of them, I
Most
think.
of the clear.
Okay.
Last is top down
Yeah,
analysis.
let's do the top-down analysis. Okay, so I don't know how I started the previous one because I'm pretty sure the sessions that were leaked, that was like 1 year ago, I guess, right? More than 1 year ago.
Yeah.
Okay, so let's see. These ranges we already went through. Let's look at some old one. Yeah, look at this. Let's look at this one itself. Okay. So now it's like this. Remember, now you know what to do on the monthly time frame, right? You have to do that only once a month. Only once a month. Okay.
Yeah.
You know what to do on the month. Now the weekly time frame is very important. Okay. So on the weekly time frame, what we do is first thing what we do is we look for the most recent major breakout structure. Okay. On the weekly time frame, we look for the most recent major breakout structure, and that has to be done on a line chart. Okay, remember that very well. That has to be done on a line chart. The most recent breakout structure that has to be checked on a line chart. So what do we have? Bearish, right? Right. So does it make
Yeah.
any sense for you to buy it here? No, right? Look at this. All the
No.
toes are getting broken. Okay, so yeah, that is that's the first thing we check on the weekly. And the next thing we do is we look for the next point of interest like we did on the monthly time frame. So where will the next month weekly candle open? From here, right? What's your next
Yeah.
point of interest? We have the rejection block, the open close level. Can you see that? Okay, we have that.
Yeah.
Now remember, you might not have this all the time, so don't try to force it. Okay, don't try to force it. If it's not there, it's not there. That's it. Okay, just jump one time frame lower once again. Okay, so there we go. Now you know what to do on the monthly and on the weekly. Okay, then what we do is we go to the daily. On the daily is where we start marking out the ranges. Okay, remember that very well. On the daily is where we start marking out the ranges, and those ranges must be based on the weekly breakout structure, because if the weekly shows us a bearish breakout structure, we're going to mark out a daily bearish range. Can you understand that? Okay. If the
Yeah.
weekly shows us a bullish breakout structure, we're going to mark out a bullish range on the daily. Can you understand that? Okay. So that is how we
Yeah.
can do that. So now what do we have? We have a bearish breakout structure on the daily. I'm sorry, weekly. Now we can mark out the daily ranges. So let's see. We had a range in here. See that? Stop font and a
Wait,
minor
let me
break in
check.
here. I think, yeah, I don't know. Yeah, minor breakout structure and a major breakout structure in here. So this is the high of the range. This is the low of the range. How was this low confirmed after this bullish breakout? Can you see that? After this bullish
Yeah.
breakout. Now, this high is acting as the breakout structure point to confirm the range and as well as the internal range liquidity, because it's only one swing high. Okay. So price
Yeah.
went up, took that out. And yeah, like once again, it's the same thing. Above this, you can look for a higher time frame point of interest, because on the weekly, we had another rejection block. See that? Okay, so same exact thing. So if you take a sell here, where is the final target? Here. See that? Right here.
Yeah.
So now what do we do? Once you get a break below this low, you know that a new range is created, right? A new range is created from up here. Can you understand that? From up here. How do we know the high has created the low of the range? You have to get a bullish breakout, right? Do we have that on the daily? No. See that? It's not there on the daily. Then what are you going to do? Are you going to panic? Or are you going to wait for the bullish breakout structure? Who knows how long it's going to take, right? Don't panic.
Yeah.
Drop one time frame lower. Go to the 4 hour. Okay, so let's see what the 4 hour is doing. Let me make this line straight. Okay. Yeah, I need it to be tidy, neat and tidy. Okay, so there we go. On the 4 hour time frame, we do have a range. What is that? This is a strong high, right? Liquidity taken,
Yeah.
minor structure broken, and as well as major structure broken in here. So there we go, high of the range. How do we know the high has created the low of the range? We have to get a bullish breakout on the same time frame, right? So here we
Yeah.
get a bullish breakout all the way down here. Can you see that? Use a line chart, you'll see it very clearly.
Yeah.
Okay, or else a swing high that created a lower low has been broken. So now we have the range from here to here. Okay, now this is the reason why I told you to focus on the high time frame POI, because now let's say you are someone tells you, okay, you're an intraday trader, so you don't have to look at the daily or the weekly or the monthly. Like people tell that, right? People tell that.
Yeah.
Then you think, okay, you don't have to look at that. So you might think, okay, high of the range, low of the range, internal range liquidity, point of interest. See, that is what people would think, right? Now everyone will be
Yeah.
waiting until it gets here and then it drops. But what did I tell you? Within a lower time frame range, look for a higher time frame point of interest. Go to the weekly. Within the 4 hour range that was from here to here, what do we have? A weekly rejection block. Can you understand
Yeah.
that? Okay, so high time frame zones are very important. Okay, so we can mark it out like that. And yeah, you can even do refinements of this. Oh yeah, I think I uploaded a breakdown of this on my Instagram channel of this trade. I'll show you. Yeah, you can just check that out later. So yeah, you can refine this into maybe this rejection block like this. Now, what are you going to do? Are you going to just sit and wait until it gets here? No.
No.
Now you know that the 4 hour has confirmed bullishness, right? So now what you
Yeah.
can do is you can use Asia and all that stuff to buy it until it reaches the weekly zone. Can you understand that? Okay, so I'm not going to show you
Yeah.
that. You can backtest that and see, because until price gets from here to here, okay, until price gets from here to here, these are the setups you're getting. Asia, buy. Asia, buy. Then what you get is Asia, sell. Asia, sell. Asia, sell until it gets here. This is what you're getting. Okay, just backtest that and see. Backtest this price action for sure. You will see what's happening here. And also on the daily, another thing to do is you have to look for the next point of interest, like we do on the weekly or the monthly. Okay, so the 4 hour has confirmed bullishness, right? So now you can look
Yeah.
for the daily point of interest. What do we have? We have an order block and a rejection block as well. Okay, so you can
Yeah.
see the reactions from these levels later. Now I'll show you the trade that I was going to show you, the sell from here. Okay, so from here onwards, you know what to do, right? Mark out Asia, wait for timing, you buy it because why? 4 hour has confirmed the bullishness. Okay, so let's wait. Let's wait and see what's happening. Okay. Yeah, just check out this price action. Okay, backtest this price action for sure. You will see what's happening in here. Okay, so let's wait.
Yeah.
Yeah, see this liquidity taken out. I think it was a 4 hour, yeah, rejection block. See that? Liquidity taken out into a 4 hour zone. Look at that. Taps starting to go higher. Patiently wait. Now we are reaching our zone of interest that was on the weekly. And yeah, look at this. Asian high, a high that was created at 7:30 a.m. See that? Obviously Asia. London open
Yeah.
12:30. Okay, Asia taken out into London into a weekly zone of interest, and then we wait for the confirmation. Why do we wait for the confirmation on the 4 hour on the 1 hour? It's a 4 hour range, right? So we can wait for the
Yeah.
1 hour. Okay, so what happened? There comes the 1 hour break. Stop font and a breakout structure. Now what do we know? 4 hour bearish, 1 hour bearish. What is that? Range expansion. Are you gonna buy it anymore? No, sell.
No.
Until it comes into the external range liquidity. Now we get the confirmation on the 1 hour time frame, go to a lower time frame to get our entries. Okay, let's go to the 50-minute. Yeah, by now you should already see the entries because you know what we do. How do we know the high of the range has confirmed the low of the range? We have to get a bullish breakout, right? So let's wait.
Yeah.
Okay, so there we get the bullish breakout. Okay, there we get the bullish breakout, high of the range, low of the range. So now can you show me the setup already? Why is price moving up? That is to take out the internal range liquidity.
Internal range.
So what's your internal range liquidity? Swing high, swing high. Mark that out. Can you understand that? Two swing highs.
Yeah.
So above that, what do you look for? High time frame point of interest. What do you have? H1 resistance. Or else use a line chart. You're getting this setup.
Yeah.
Boom. You know what happens when this setup forms. Okay, it will melt. It will. Okay, for sure it will. Now let's wait for the right time. Okay, so let's wait for the right time. Now, can you see this is too late in the day, right? 11:45
Yeah.
p.m. Are we going to trade at that time of the day?
No.
Obviously not. Okay, because in a little time Asia opens, so we'll have to wait. So let's wait. Let's mark out Asia now. Now these days, yeah, this was on November. So yeah, November 21st. So Asia started at 3:30 a.m. and ended at 10:30 a.m. our time. So it should be from 5 p.m. to New York midnight time, like I told you. Yeah, see that? 5 p.m. to New York midnight time, Asia. Okay, so let's mark out Asia. Let's wait for Asia to end. Okay. Yeah, luckily Asia did not go into that point of interest, or else we would have missed the sniper entry because we're not going to trade Asia. Now, at what time of the day are we like? Are we going to say the Asian high is a strong high and look for sells in here? No, look
No.
at this liquidity, a pool of liquidity. So then, at what time of the day are we looking for sells? Now, this was November, so right now London kill zone is at 12:30. London session is at 1:30. Okay, so at this time of the day is when we are looking for sells above Asia. We can sell it. Okay, somewhere around here. Stop loss can go where? Above the strong high. Where can we target? First target will be external range liquidity. Now let's wait. Okay, time is perfect. Can you see that? A manipulation of
Yeah.
Asia. Everything is good. Now, see, this was like 1 year ago. But you see, it's the same concept. Same concept. 1 year ago. But no, like I did take a loss in here trying to do shit on the 1 minute time frame because those days. Okay, those days. So yeah, I did take a loss in here. But you see this setup, right? There we go. In between that time of the day. So what is this? This is the Judah swing, right? The falls run in the opposite direction. I told you, order blocks are forming. These demand zones are forming. Bullish trend lines are forming. How many are buying it? Pretty much everyone, right? Everyone. But what are we doing? We're selling it. Okay, we're selling it. What happens? There comes the momentum. Boom. Melting. Can you see what happens when the time is right? There it comes.
Yeah.
Pay yourself down here. Leave the rest into the 4 hour external range liquidity. Can you understand that? What happens? There it comes. Now, once again, backtest this price action. You will see Asia sell, Asia sell until it comes into the external range liquidity, like I showed you in that previous daily range in that current price action. See, you can see what's happening. See, Asia, look at this. This is an Asian high created at 6:30
Yeah.
a.m. Look at the manipulation of Asia, 12:30. See that? 12:30. Okay, look at this one. Asia, this day we had news, I think. Look at the manipulation. Look at the time of the manipulation of Asia. 5:30. New York Open. I told that to you, right? Same exact thing.
Yeah.
Okay, same exact thing. So take a sell here, target the external range. Can you understand that? This is how you could play with the ranges. Okay, this is how you could play with the ranges. So let's look at current price action. Now I told you, what do we do on the weekly time frame? Okay, what do we do on the weekly time frame? I told you to look for the most recent breakout structure, right? On the weekly time frame. And
Yeah.
where I told you should do that on where? Line chart. What is the recent breakout structure we have? Bullish breakouts. Can you see that? They have broken out of
Yeah.
it. So what are you going to mark? A bearish range or is a bullish range? You're going to mark out a bullish range. I told that to you, right? Now go to the
Yeah.
daily or the 4 hour, mark out a bullish range. Where will a bullish range start from? A strong low. Now we can't see any strong lows on the daily. If there's nothing clear on the daily, what should you do? You go to the 4 hour. See that? On the 4 hour, there we have the strong low, high of the range, bullish breakout even on the weekly. So now we know that if it comes down, it is only coming down to give you a pullback. So now it is moving up once again. So now can you understand what we do? I showed you what we do on the
Yeah.
monthly. I told you what to do on the weekly. I told you what to do on the daily. I told you what to do on the 4 hour. Then I told you how to play with Asia and the lower time frames. Okay, so
Yeah.
can you understand everything? Let me know. Was everything clear? Yeah.
Yeah.
So just check your question book to see if your questions are cleared. I'm pretty sure all of them are cleared by now.
All of them clear.
Everything is cleared, right? So yeah, if
Yeah.
you have any other further questions, just drop me a message on Telegram with the chart and a voice note. Okay, with a voice note. Okay, so
Okay.
that
Okay.
way I know what your question is. I hate reading stuff. Okay, so just send me a voice note. I'll listen to it. Okay. So yeah,
Okay.
was everything clear? Let me know. Do you have any other doubts? Like, should I go through anything else? Yeah.
No.
No.
All doubts have been cleared.
Everything is clear, right? Okay, so
Yeah.
and I'll send the recording to you once the conversion is over. It might take more than one hour because I think yeah, it should be 3 hours and around 30 minutes long this session. Okay, so I'll send it to you at around 1 a.m. Okay, because the conversion will take a lot of time. Okay, so I'll send it to you later.
Okay.
Okay, so everything was clear, right? Once again, yeah.
Yeah.
Okay, bro. So yeah, if you have any other questions, just drop me a message on Telegram. Okay, and
Okay.
also just please make sure you keep this recording safe. Okay, because you see this stuff, right?
Yeah. Yeah.
No one teaches this stuff. Like if you have been through the SMC courses, you know how valuable this is. Okay, so
I've been through 20 courses of SNC.
so that's the thing. Like, did you see anyone teaching these concepts? No one. No
No,
one.
this is
No one knows
different.
what time and price is. No one knows how to
Yeah.
combine like support and resistance with liquidity. Like you saw how powerful that is, right? Like a
Yeah.
completely different approach to smart money. Okay, so keep the
That's why I
recordings
took
there.
the course.
Like, it's worth it, right?
Even the league videos.
Yeah, like the leaked ones, just completely forget them. Okay, just stick to the new model because
Yeah.
in the leaked ones, you saw how we used the lower time frames, and that was really messy. Okay, so I know it's not that easy. Okay, so just stick to these, stick to these. Okay, like not a huge difference from what we did because we use ranges, we use Asia and timing
Yeah.
and all that. That even in those we use that, but this is way more
POI is different.
different. Okay, different and accurate. Okay, very accurate. Okay.
Yeah.
So yeah, so that's it from me, bro. So if you have any other questions, just drop me a message on Telegram, okay?
Okay. Okay.
All right, bro. Bye bye. Good night then.
Good night.
Okay, bye bye.